Jay, slightly higher at the open. That is no longer the case. That might change though by the time Jay comes on in a couple of minutes, so stay tuned for that interview. If you have any questions for him, for our clients, do send it to us via the IB. You know how to do that. That's next. This is Bloomberg.
VK ฟิล์มที่ช่างติดรถยนต์แนะนำติดง่ายกันร้อนดีราคาถูก
This week, as the world watches inflation rise, employment rebound, and fiscal policies react, all roads lead to Jackson Hole for the Kansas City Fed's 2022 Economic Policy Symposium. Bloomberg's all-star team is live as policymakers and financial insiders discuss the economic issues and solutions that keep the world's money moving. Coverage starts August 25th on Bloomberg Television and Radio.
Welcome back. Let's talk about a debut in Seoul. SoftBank-backed ride-sharing company SoCar has debuted on the Korean Stock Exchange this morning. The startup halved its listing target because of worsening market conditions. Still, it's eyeing overseas expansion and wants to build an Asian mobility super app. Joining us from our Seoul studio for an exclusive interview is SoCar's CEO, Jake Park. Jake, good to have you with us. Well, taking a look at your stock right now, trading at session lows. Are you disappointed?
A little bit, but I think like IPO is like stepping stone for us to reach our end goal. So, and because we are very confident with our like future performance, I think it will go up and like it's a like part of the journey. So I think it'll be okay in the near future.
Why would it be okay, Jake? I mean, I'm just wondering, in the first place, why push ahead with the IPO when there's so much market uncertainty out there, so much volatility, almost setting yourself out for failure?
Yeah, SoCar is growing really fast in Korean mobility market, which is changing every day. So we believe that like going public and using IPO proceed will create a greater value rather than just like waiting for like passively for the like market turnaround. So that's the reason why we decide to like go public in this like hard situation. And we believe that IPO is just a stepping stone to reach to our end goal and the grand vision. So we believe that using this kind of like IPO proceed will make us to like go up and continue the growth momentum. So I think like going IPO would lead us to the better position.
Right, Jake. I mean, the market conditions did force you, though, to raise a lot less money than initially planned, and you also priced at the low end. I guess the other part to Haslinda's question was, how does less money being raised right now change any of your spending priorities to get to that next step?
Actually, simply speaking, it won't change our plan, and also
okay.
It won't affect to our like growth or profitability. So I think IPO proceed that we raise is enough to continue our growth momentum. So it's totally fine.
Understood. All right, let's talk about gross momentum then. Your revenues, I think, last year, 289 million Korean won. What are your revenue projections for this current fiscal year?
Like for the first half of this year, we grew up around like 38% compared to the last year. And I think we can continue the growth momentum like this in the second half of this year. So I believe that our like growth will be more than 30% and around the 40%. So I think we can grow very quickly as we grew up before. And also our like profitability itself will be improved a lot from this year.
Jake, talk to us about your super app. Where are you with it? Will it be a game changer for the company?
Yeah, we are preparing for our like super app strategy, and we continue to add on other like mobility services on our platform, and so that we can upsell to our like car sharing users. So it will make us make more money and also like being more profitable from this year. So, and I think from the first quarter of this year, we can show you like our super app works, and it will be continued for the next year.
You've talked about how some of your proceeds will go into M&As. When do you expect to make those acquisitions? And how about your expansions to markets like Southeast Asia, the US? What are the plans there?
Yeah, actually, we are going to use around like 60% of our IPO proceed to make a strategic M&A. And we have a long list of the target companies which will lead us to build a better mobility platform. And I think like because of the market situation, good companies will come out to the market at an attractive valuation, and that will be a great timing for us to go with them. So we are preparing for it, and I think we are seeking over the good companies in our target list. So it will like happen in a few years. And also, in terms of the expansion, I think like Korean market itself is like huge enough. So we are going to like focus more on the Korean market because the market is growing really fast, and the car sharing industry is evolving really quickly. So we are going to like stay focused on improving our service in Korean market first. But we think that like a fleet management system as a service will be much easier for us to make a expansion to the overseas market. So I believe that this kind of like fleet management system, the software business, will lead us to make a overseas business before we like going outside with our car sharing business.
Jake, since you mentioned your focus now primarily obviously on your home market, where it's worth noting that you are already very, very dominant there, I'm just wondering how deliberate are those efforts to corner the part of the market that you don't already have? I mean, are you concerned about anti-monopoly, for example, and those sort of broader issues?
Actually, the market is growing really quickly in Korea. Car sharing market itself will grow around 20 to 30% every year. We estimate that the car sharing market in Korea will grow up to around like 4 trillion Korean won by 2030. So the market is growing really quickly, and also we see that the single household ratio is increasing, and also we also see the decreasing of the number of new car registration rate in their like 20s to 30s. So we believe that this kind of like market trend lead us to like great market situation for us.
Jake, thank you so much for coming on the show. And we didn't get to things like autonomous vehicles, which I'm sure we'll get to in the next conversation. Jake Park, CEO of SoCar, they're joining us exclusively from where they debuted, of course, the day over in Seoul. Now, just ahead, we're talking Credit Suisse and this Bloomberg story here about the investment bank perhaps being on the chopping block. That's next. This is Bloomberg.
ยการออกแบบและติดตั้งวิดีโอคอนเฟอเรนซ์โดยผู้เชี่ยวชาญ Smart Solution Computer
We believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. This platform will help them share their ideas to reshape our world. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
The difference between endless research and a winning strategy. To improve your firm's productivity and profitability, Bloomberg Law combines the latest in AI-powered tools and in-depth analysis to accelerate the research process. To grow your practice and make better use of your valuable time. The difference is Bloomberg Law.
Welcome to the world of decentralized finance. Bloomberg's covering all things crypto, the people, the transactions, and the technology. Bloomberg Crypto, Tuesdays.
Right, welcome back. All right, don't mind me if I'm just glancing over my camera. Markets are doing this. Okay, we're okay on Hang Seng Index. Sorry, it's behind the camera, quite literally. We're talking Credit Suisse now. Sorry, my telecomputer here told me I was going to check markets. Credit Suisse has the investment bank on the chopping block. Rish is with us right now. Rish, what are the options?
Yeah, I mean, the options are several, but I mean, this has just gotten real. We've had various chief executives before really tinkering at the edges, like Citizen Tiam and after him, Thomas Gottlieb. But now, well, we've got Ulrich Körner. He's determined to cut costs. He's going to do that. We don't know how, but at the same time, of course, he's been increasing bonuses for some of those rainmakers in order to keep the top talent within the company itself. But it's all really come to a head, and you could say it just got real, given Archegos and Greensill Capital Management. Huge losses incurred there. That's really put the pressure on the CEO and the chairman, Axel Lehman, to do something about it. I mean, record losses for the century in terms of overall trading, $1 billion there. 2010, this was top 5 global investment bank. It ain't anymore. It's been a steady decline, and for some, it's quite sad, and they're trying to retain it. So what do? Do they split off the investment bank? That's the thing. That's really not being seen as an option. At the same time, perhaps they can incorporate it to various other parts of the businesses that they have. But it's not all bad. I mean, it's a curate's egg, ultimately, the investment banking side of things. You've got the good parts, like the Securities Products Group, which has brought in something like $10 billion in terms of revenue over the last decade or thereabouts. But others haven't done so brilliantly. I mean, equity trading down, of course, given what's been happening out there at the moment. And we've got also, don't forget, that turmoil caused by Archegos and like $5.5 billion really at the moment being lost on that. So that's really what it's all about. Do they see this investment bank carrying on? Well, pressure's on. Don't forget that Ulrich Körner is known as Uli the Knife. Back to you, Haslinda.
That's right. Credit Suisse stuck within a rock and a hard place. Rishad Salama, thank you so much for that. Let's do a check on how markets are. Investors pretty much on edge as we await what transpires at Jackson Hole later this week. Of course, it is all about the Fed, whether it'll do 75 or 50 in September. Taking a look where we are in terms of those benchmarks, stocks down. We have FX lower on the back of a stronger dollar. And of course, commodities pretty mixed picture. Plenty more ahead. This is Bloomberg.
ไม้สังเคราะห์ SCG ล็อกสีสวยทนจากทุกสภาพแวดล้อมที่มีเทคโนโลยี Color Lock Plus
We believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. This platform will help them share their ideas to reshape our world. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
So now you've been at JP Morgan for about 25 years?
Yes.
Okay, so, and now you run one of the most important parts of JP Morgan, which, as I say, is the asset and wealth management business. What actually is wealth management, and how is that different than asset management?
Great question. The two are often used interchangeably, but they have distinctions. Asset management business is where we manage money on behalf of individuals, institutions, sovereign wealth funds, pension funds. We manage them in mutual funds, we manage them in ETFs, we manage them in single stocks, single bonds, hedge funds, private equity, and the like. And that is the heart of the fiduciary business that we run here at JP Morgan. Wealth management is that plus understanding someone's entire balance sheet. So for the individuals where we manage money, we also help them with their mortgage. We help them with a loan that they might need. We help them with their basic credit card. And so wealth management is trying to help someone with their entire life, both their assets and their liabilities, their planning, their gifting, the legacy that they want to leave for their families, the 529 plans they need to prepare to get their kids to go through college. And it's a great insight into people's, entire journey.
I've always been a person who's just been attracted to hair. I like to sit and think and theorize how I can manifest these visions that I have for braiding and how I can take something that may seem like it's a line drawing in my mind and apply that to someone's scalp.
We are the only culture that has hair that grows out of our head the way that it does. Anyone from the African diaspora is born with this amazingly curly hair that can be shaped into a variety of different ways of expression.
I want Black people to love themselves for how they naturally appear and also to appreciate the cultural practices such as braiding that our ancestors have practiced for centuries.
Good Monday morning. We're moving into about an hour to noon here in Hong Kong and down in Singapore. Geography, yes, that's correct. Welcome to Bloomberg Markets Asia. I'm David Ingles with Haslinda Amin.
Our top stories. Chinese banks lower their benchmark rates for the first time in months, a bit to boost waning sentiment amid a power crunch and COVID curbs. That's giving mainland shares a boost, but failing to lift a wider risk-off mood. Investors now awaiting Jackson Hole for clues on the Fed's hiking plans. Plus, we'll ask Sri Lanka's central bank governor if the tightening cycle is over after 950 basis points of hiking this year. And it is about central banks. We are awaiting to see what transpires at Jackson Hole, whether or not there is an indication that perhaps the Fed will move 75 or 50. Of course, we had Barkin coming out to say that, you know what, he is in favor of front-loading. Why wait? Taking a look at where we are in terms of those benchmarks, mainly red across the board. The JCI down about 1%. The ASX 200 also lower by 0.6%. It is difficult to get those benchmarks in positive territory until there's greater clarity of the Fed's movement from here. It is also about the strong dollar. That is where investors are taking shelter, putting some stress on Asian currencies, in particular emerging market currencies. And Dave, we know that the pound is currently acting like an emerging market currency. Higher yields not supporting the pound at this point in time. And of course, in terms of yields, they are trending higher.
Absolutely. That's really a story we need to keep an eye on, and really just divergence between gilt yields and just the exchange rate itself, right? And, that takes us into the other point we were talking about earlier, the euro, right? Again, here we are. We're trading, again, we're flirting with about 1%. Guys, can we get the China's full screen back up, please? A couple of things to talk about, obviously, when you look at these Chinese markets. Last 30 minutes of trade, there were some changes to the HSI, not the CSI 300. That's one to watch. CSI 300 opening week. We've reversed all of that, and then some more. We're doing about 0.7%. Sorry, I have to look over my camera again here. And then you had the lowering the loan prime rates, and it takes us really into quite a big week, what they do about the property market and everything. And in between that, of course, they announced this joint statement on Friday. You had the central bank, you had the finance ministry, and the housing ministry all issuing the statement talking about that developers will be given access to these special loans from their policy banks, and hopefully that helps sort of mend the tide here. Also within this market, we're looking at automakers, EVs especially. There's a Sichuan power crunch story to contend with. That's a big hub in terms of production for EVs and solar panels. And the other constructive story is really them looking to extend the tax relief as it pertains to some purchases in the EV space. So we'll talk about all of those things as we get underway this week. Let's get it over now to Vonnie Quinn. She's in New York. She has your first word news. Vonnie.
David, thank you. The Chinese province of Sichuan is extending industrial power cuts to deal with what it's calling extremely outstanding deficiencies in supply. Officials say blistering temperatures and surging demand for air conditioning have caused gaps in generation. An order limiting power supply to some industrial users will reportedly be extended to Thursday from Sunday's original end date. China's biggest COVID outbreak may be easing, with cases in the Hainan Island tourist hub Sanya falling to 550 on Sunday. The southern island has been leading in new infections, followed by Tibet and Xinjiang. In Hong Kong, daily cases rose to the highest in more than 4 months on Sunday at more than 6,500. The city is reopening one of its biggest isolation facilities as the surge puts pressure on hospitals. Singapore is repealing a colonial-era law that criminalizes sex between men. Prime Minister Lee Hsien Loong says removing the legal ban on sex between men is the right thing to do and something that most Singaporeans will now accept. Lee stopped short of recognizing same-sex unions, adding that the constitution will be amended to protect the definition of marriage as being between a man and a woman. Pakistan is reportedly holding consultations on whether to file a case against former Prime Minister Imran Khan over remarks he made about state institutions. The Interior Ministry told local media the speech continued a trend by Khan of targeting the army, judiciary and police. Khan's supporters gathered in Islamabad on Sunday night after a report that he would be arrested over the speech. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Vonnie Quinn. This is Bloomberg. David.
Vonnie, thank you. Here's a preview of the week ahead. So we have already had the loan prime rates out of China, a couple of rate decisions here in the region. You have Indonesia, you have Bank of Korea. What you don't see is you're also going to have some key data out of Europe, these PMIs on Tuesday. And all roads, Haslinda, lead to Thursday and Friday. Something's happening. I think it's in Jackson Hole.
That's right. It is Jackson Hole. In fact, Federal Reserve officials and central bankers from around the world gathering in Jackson Hole this week. They're laser focused on Fed Chair Jay Powell's speech on Friday. Our global economics and policy editor, Kathleen Hayes, will be there, but she is here today. Kathleen, what is expected?
Well, I think the big focus here is on Jay Powell, of course. Traditionally, the Fed chair kicks off this two-day symposium with official remarks. Over the years, this has become more and more a setting for the Fed chair to make an important statement, something big. And will we get it? Well, we certainly know there's a big focus on inflation. How worried is he on inflation? How hawkish is the path he's going to paint for correcting the situation the Fed and the country are in now? And remember, we haven't heard from Jay Powell on inflation, on dovish or hawkish, since the last Fed meeting. And since then, the inflation numbers cooled off off from a super sizzling rate to only just very, very hot. We also see the payrolls numbers jumping, though, more than twice than was expected in the month of July. So they've got high inflation on one side, maybe starting to break a little bit, but you still got a strong labor market. Are you really going to cool things off? And I think a big question here is Powell ready to risk recession? Other Fed officials have said yes, they are. And Jay Powell has said he sees a soft landing, but he still is hoping that is possible. We've got a look here at the Fed funds rate, what it has been doing, and clearly the Fed's looking to go to 4% by the middle of next year. Markets maybe don't seem quite on board with it, but the latest person was Tom Barkin on Friday, president of the Richmond Fed. He said, we're committed to returning inflation to our 2% target. We'll do what it takes to get there. That's what people want to hear from Jay Powell. There's a path to getting inflation under control, but a recession could happen in the process.
Kathleen Hayes, our global economics and policy editor there, and that's, of course, Tom Barkin there talking about this path towards hopefully normal inflation. Certainly we're a lot above that right now. Right, let's get a little bit more context here in terms of market context and what you do with that information. Joining us now, in fact, is our first guest, is our Silas Jawul, is with us right now to talk us through really these clues. And chief economist, by the way, and also head of market research at RHB Banking. Silas, good morning, sir. Hope you're well and hope you had a restful weekend. It's a big week ahead. There's obviously Jackson Hole to look forward to. Generally, expectations have been tempered as far as any sort of pivot is concerned. Do you think the market has this one correctly?
So the market is still priced. Keep in mind that second half of Fed funds rate cuts. So the market pretty much hasn't come to the same conclusion as the Fed or ours, for us, as a matter of fact. So there's some repricing going on. We still maintain our view that the Fed will remain hawkish for some time. It won't pivot just yet in the near term. And we're going to 3.5% as far as the Fed funds rate goes by the year end, and 4% next year. And we're not pricing in any cuts in the second half of next year.
As a market participant, then, I'm trying to wrap my hand around this also, Silas, in terms of, from 8% to 2%, that's not going to happen overnight. It's certainly not going to happen over the next 12 months, and hopefully it does, but it doesn't look like it will. How does the Fed manage their messaging along that path, not knowing if we actually get to 2%?
Yeah, that's exactly right. That 2% target. It doesn't look like it's coming anytime soon or even in 2023. And there's been some issues in terms of, let's say, the Fed's communication and markets then pricing in second half of 2023 rate cuts. So I think the Fed's main messages will be tilted more towards the idea that the dynamics of inflation going forward are unclear. Still volatile inflation numbers. We think that as well. 1 month doesn't make any trend, and that inflation will remain elevated for quite some time. It will remain committed to bringing inflation down to that 2% target. The economy looks fine. We're slow. The U.S. economy is slowing, but from our perspective, it's a mid-cycle slowdown. I think the Fed will continue to reemphasize that they will be able to achieve the soft landing thesis, that the labor market conditions remain strong and will remain so in the forecasting time horizon, and that clearly that financial conditions have loosened, not just by looking at the U.S. stock market, but global money supply. The contraction is starting to actually recede. That's something that I think a lot of people haven't talked about.
Silas, on the one hand, we're keeping a watch on Jackson Hole. On the other, the QT by the Fed, it is set to double in about 2 weeks. What impact do you think that will have?
This has been the issue, right, in terms of exactly estimating the QT versus the Fed fund rate hikes. Markets know that it's coming, but essentially still pricing, some cuts in the second half of next year. A little bit of a disconnect there I would say. So extremely uncertain of what that impact will be. But the bottom line is that the worst we've seen in the sell-off in the longer duration bonds in the U.S. is pretty much over. We still think there's basically a bit of upside, where the average for the second half of the year for us in U.S. 10-year is 2.8 to 3.1%, and next year we're looking at 2.5 to 3%. We're not in that camp that we're going to collapse in terms of yield, at least over the next 1 year or so.
The biggest risk right now, Salish.
I think the biggest risk really is that we see the inflation data points, not only in the U.S., but we have also inflation data released in Malaysia this week, is that it suggests that the momentum of inflation in terms of the so-called peak inflation, we're not quite there yet, because what we're seeing from our own proprietary indicators are that supply chain congestions in the U.S. are reaccelerating. They're certainly very elevated in China, and even here in Southeast Asia and Malaysia and Singapore. The supply chain congestion is still fairly elevated. So people are still looking at just the decline in commodity prices, which isn't the complete story. You got to look at supply chain congestions. You also have to look at how growth around the world is panning out. And it's slowing, but not that rapidly, which would mean that essentially the demand side pressures on inflation at a global level or even at a U.S. level are behind us. I think that's one of the biggest risks, which would then mean that the market starts repricing back up to where we came from in June, that the terminal rate is 4% and it's not 3.5%, and maybe prices higher. Who knows?
Right. And of course, 10-year yield has been hovering between 2.8 and 3%. Salish Jha, RHB Banking Group, thank you so much for that. Still ahead this hour, we'll delve into India's venture capital and crypto scene with Antler Global's Nitin Sharma and get his views on Web3 startup valuations. But first, Sri Lanka's central bank governor lays out his plans to tame Asia's fastest inflation. Nandalal Weerasinghe joins us live next. This is Bloomberg.
ไม้สังเคราะห์ SCG ล็อกสีสวยทนจากทุกสภาพแวดล้อมที่มีเทคโนโลยี Color Lock Plus
We believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. This platform will help them share their ideas to reshape our world. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
Is it possible the industry is in an arms race that will lead to spending itself into an oversupply? I mean, that has happened before.
We've looked at this very carefully, and the digitization of everything. Tell me what aspect of your life, Emily, isn't becoming more digital?
Well, I'm trying to prevent that, but yes, I think it's happening.
And COVID has accelerated that. The industry crossed $500 billion last year, the semiconductor industry overall, and estimates are $1 trillion, a doubling by the end of the decade at that point. I believe those estimates. It's not that there's not going to be some blips and turns on the way, and the majority of that is driven by leadership process technology, of which only 3 companies can satisfy that need.
Only Singapore is doing okay. Rest of Southeast Asia, to varying degrees of bearishness, let's put it that way. Philippines, bottom of the heap right now, 1.5%. Let's turn our attention now to Sri Lanka there, and the central bank on Thursday holding key rates steady. Bloomberg Economics says that it makes sense, that move and that decision. Now, they say hiking further won't really curb runaway inflation, and holding certainly avoids adding to the government's other issue, which is this debt burden and rising interest rates, obviously. We're joined by the governor of the Sri Lankan Central Bank, Nandalal Weerasinghe, joining us now live to talk about, of course, what they did, why they did it, and the path ahead. Governor, let's start off with very, very simple question. Are you done hiking interest rates?
Yeah, I think what I can say compared to the last monetary policy cycle that we made the decision to now, we have seen some of the improvements in terms of inflation expectations and future inflation path. Earlier, we thought inflation would go above 70% and remain at that elevated level until December. But the latest projection that we have seen, inflation is basically trending down. It will be peaking somewhere in September, but it won't be touching in our predictions beyond 70%. And also in terms of other indicators, in terms of monetary expansion is slowing down, prices are settling down, exchange rate is stabilizing, and also the kind of inflation expectation, as I mentioned earlier, all are in the positive direction compared to last cycle. This is the reason why we decided to maintain the same high interest rates compared to the inflation. But going forward, we will be closely monitoring. We hope that situation, in fact, both supply side and demand side, in terms of supply side issues that we had shortage of fuel, gas, all have been settling down. There's no shortage of availability of essential items. And on the demand side also, we see indication of contracting the demand more than what we expected. So we took that decision going forward in the next cycle. We will continue to monitor the situation, and if we think things are moving in the right direction, we probably take a different decision at that time. But I can see situation is much more stabilizing than what we expected earlier.
Governor, then, do I take it that the preference, and we'll see what the data shows us eventually, but the preference is for the next move to be a rate cut? Is that accurate?
I don't think I can make that statement now. Only thing is that if we think inflation is trending down sharply, obviously, then we can look at that point. But it's a bit, we have to look at a lot of data. Without that, I don't think I can comment whether it will be cutting down or maintaining stable or increasing. I think that is a decision we have to make at that point.
Governor, there was a risk that inflation in Sri Lanka could touch 70%. Is that no longer a risk for you?
Yeah, in fact, in our projections, we see inflation will be moving below 70% even after the adjustment of electricity prices that was introduced by the government last week. We have incorporated the impact of the energy price rise as well. With that, with the supply chain issues easing and also demand side is easing, we are not going to see in our predictions inflation won't touch 70% going forward, and also it will be peaking somewhere in September compared to earlier we thought it would be peaking somewhere later. So that's a clearly different and much better disinflation path that we see going forward as far as our prediction is concerned now.
Governor, the focus is also on Sri Lanka's debt. We have the IMF visiting Sri Lanka for talks next week. Can you give the IMF assurances that Sri Lanka's debt is sustainable without restructuring domestic debt?
This is exactly what we are discussing with the IMF. First part is to reach a stock-level agreement on the overall macro fiscal policy framework for next 3-4 years and the medium-term framework that we are coming closer to reaching agreement on a macro fiscal framework. The second part for us is to agree and negotiate with the debt targets that for us to make our medium to long-term debt sustainable. We are in the process of having this discussion. Only after that, basically, what we can say where the debt targets we have to meet. We are basically discussing with the IMF. We are hoping to reach that agreement also. Then only we will approach the creditors. In terms of domestic debt restructuring, our position, as I mentioned earlier, that remains as we announced on 12th of April. We would like to restructure only external debt, and if we touch domestic debt, in our view, that will have a significant impact on our banking sector. That will not help even the external creditors in terms of recovery of the economy. We need to have a stable banking system. That is why our position, as we announced earlier, remains that this is a balance of payment crisis. We would want to restructure external debt because of the balance of payment situation and our ability to meet external debt service payments. We don't see a problem with us meeting the domestic debt targets. So this is why we think we can manage the situation without touching domestic debt, that as a position we announced even earlier on 12th of April.
Governor, if all goes to plan, realistically, when do you think the country will get that funding?
So this is where we think, for example, now once we reach the start-level agreement, then the timeline is that then we have to approach all our external creditors and start negotiating and discussing in good faith for us to obtain a relief on the distress payments. So therefore that we need what they call financial assurance from our external creditors. We think next about 3-4 months. So hopefully, if all goes well, if all external creditors are cooperating with the Sri Lankan government debt management strategy, then hoping that we would be able to getting financial assurance somewhere in December, so that the IMF can submit our paper to the executive board so that they can start disbursing the extended fund facility towards end of this year. That is our timeline that we would like to basically implement. That all depends on how we got the support from the external creditors and how negotiation process going on. So this uncertainty is there. So hopefully that we all will be supporting us.
Right. Governor, a lot depends on your creditors. We hear that the president has asked Japan to invite India as well as China to talk about debt restructuring. Any update on that? What's been the response from the creditors?
No, in fact, we had not officially approached the creditors yet. This way, as I mentioned, we are waiting until we come to agreement with the targets we have to reach and start with agreement with the IMF. Only after that, we'll be reaching out formally, but in between, we have been providing data information, sharing all the information with all our creditors for them to be able to facilitate the process. That is where we are now, but we have not officially approached the creditors through our advisors yet. That will happen only after we reach a start-level agreement with the IMF, or probably next month.
Governor, the other aspect which isn't talked about as much as, I guess, your interest rates and the funding is, and you touched on this a little bit already, the banking sector. With the economic contraction, how would you describe the current state of the banks, and do they need to recapitalize?
Now, obviously, when in the banking sector, when the economy is contracting around, say, 7 to 8%, obviously, there will be NPLs, non-performing loans, will be rising from the current levels, which requires some kind of recapitalization needs for the banks. And in fact, we have been discussing with each bank and looking at their risks and uncertainties and challenges. And we are basically discussing with the banks if there's a need, how to recapitalize, what kind of support that they need, kind of regulatory forbearances, what their plans to recapitalize. All these things are basically in the discussion. I am confident that the rising NPL situation. In fact, right now, banks are in a very good position. All their requirements are above the requirements of what we are under Basel III. But going forward, if NPLs are rising, obviously there will be some stress on the banking sector that we are in a position to handle together with the banking sector to mitigate that risk going forward.
Governor, we know that the president is set to deliver his interim budget in September. What are you hoping to see in terms of fiscal consolidation?
That is an important other policy measure. Fiscal policy will have to support the monetary policy together so that we can reach macro fiscal framework that we are planning to achieve going forward. Important part of that framework is to implement all the fiscal policies and tax measures that government is going to implement. This is for this year. The next budget for this year will be presented next month by the Minister of Finance to the Parliament. This will have further measures to strengthen fiscal consolidation. And obviously for next year, 2023, there will be another budget presented to the Parliament with some stronger policy measures in November 2022 for the next 2023 budget. This will have further consolidation in terms of revenue as well as expenditure measures. Those we expect. And also, in addition, the structural reforms of the state-owned enterprise are the other important piece of legislation that also will have both budgets will have the policies that will be announced to address the reforms in the structural reforms in the state-owned enterprises. Yeah.
Governor, final question, 20 seconds or so if you can. Is the FX crisis over in your view?
Sorry, I'm sorry, I didn't get the question.
Governor, always a pleasure. Governor, is the FX crisis over, Governor, very quickly?
Yes, I think we can see situation is much easy, and even without any bridging financing, now we can manage the requirement for essential imports with higher exports and curtailing imports. And we are managing situation much better than what we had earlier. So going forward, we can manage the forex situation much better going forward. We can see stabilizing currency, more financial availability in the banking sector, and central bank also building up a gradual basis. Thank you.
Governor, always a pleasure. Nandalal Weerasinghe, Sri Lankan Central Bank Governor. Keep it here with us. This is Bloomberg.
ไม้สังเคราะห์ SCG ล็อกสีสวยทนจากทุกสภาพแวดล้อมที่มีเทคโนโลยี Color Lock Plus.
You will put a woman on Mars. You will be the first chief crypto officer because when you subscribe to Bloomberg, you won't just get news. You will get insight into limitless possibilities. Before you change the world, Bloomberg.
However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg. Today's CFOs are reshaping the C-suite, positioning companies to meet the next generation of challenges, breaking out of traditional roles to become Chief Future Officer, like Marriott's Leanie Oberg.
One of the most important things is looking around the corner.
Adrian Mitchell from Macy's.
We have to let go of the traditional legacy department store.
And Luca Zaramella at Mondelez.
We tend to believe that all consumers are equal. They are not.
Look for Chief Future Officer on Bloomberg. Welcome to the world of decentralized finance. Bloomberg's covering all things crypto, the people, the transactions, and the technology. Bloomberg Crypto, Tuesdays.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Hello, how are you doing? Lu Jiazui. That is right across, well, that's in the financial district. And in case you're wondering where the camera is mounted, it's right outside. I believe that's the IFC across the Super Brand Mall. What you're looking at is the Dongfang Mingju. That's the Orient TV tower. You look across the harbor, that's Puxi, of course. 0.5% as we head into the lunch break there. And it certainly has been a fairly eventful morning so far. When you look at these markets, I mean, you had everything from a slightly stronger fix in estimates. Then you had, of course, this reduction in the loan prime rates, which we'll get to in just a moment there. So we are headed into the break on fairly solid footing. Has.
You got to wonder if those gains are sustainable, right, Dave? I mean, given the fact that we have this massive power crunch, we have an economic slowdown in China, you got to wonder whether those gains are sustainable. We'll wait and see. But in the broader market, it's looking like this sentiment being dictated by Jackson Hole coming up later in the week. I mean, will the Fed do 75? Will it do 50? There are lots of voices out there, including Markin, saying, you know what, bring it forward, front loading. Let's do it now. Why wait? But of course, that is impacting sentiment. And you know what? They're pretty much taking shelter in the dollar. If you take a look at the FX space, weakness pretty much across emerging market currencies. There you have it. The Nikkei 225 back from lunch, down 0.4%.
Yeah, let's have a look now at, certainly you have two big stories, right, Has? There's the Jackson Hole meeting, there's a slowing Chinese economy, and there's this earnings story that we're continuing to follow across this. Just earlier on, speaking about the slowdown here, this reduction in your loan prime rates, and of course there's also this power crunch that's taking place there. Stephen Engel, our Chief North Asia correspondent, is here with us to talk us through, of course, what, I guess, the latest steps, and what's really been a very, very long list of steps they're taking here to shore up growth and activity.
Yeah, different set of scenarios here than in Jackson Hole, obviously, as the Fed is hiking rates likely, and then, of course, the PBOC is cutting back rates to stimulate some growth. And inflation not nearly as big of a problem in China right now. So it was, there was a lot of talk, obviously, going into this LPR decision. The fixing today at 9:15 Hong Kong time, Beijing time, was that it would be the consensus. Every economist that Bloomberg spoke to said it was going to be a 10 basis point cut, essentially. Mimicking what we saw in the one-year medium-term lending facility last week. It came in at 5 basis points. And I can't necessarily read into what that means, but we did get the 15 basis points cut from the 5-year, and that is more representative of the mortgage market. So we can clearly say that authorities are looking at, supporting the property sector, and they do not want more mortgage boycotts and the protests, and they do want these developers to finish their properties and to get them delivered to the buyers, because in addition to these rate cuts that we got from, on the loan prime rate, we also had news late Friday. It kind of slipped under the radar here. Xinhua reporting that the three big ministries, well, the PBOC included, and the Finance Ministry and the Housing Ministry had a joint statement saying that they're going to provide special loans for particular developers who are having trouble raising financing to finish their properties. And again, they're throwing, I'm not saying it's the kitchen sink yet, Dave, but they're trying to definitely shore up one of the biggest pillars in the economy, and that's the property sector right now.
Not yet the kitchen sink, Steve, but you got to wonder, right? I mean, the drag on growth from the power crunch that China is undergoing right now.
Yeah, so there's the property headwinds, there's COVID zero headwinds, there's the platform economy that has been under regulatory stress, obviously. There's record youth unemployment right now. All those July numbers were well below expectations. And again, as a caveat to that, the cuts on the loan prime rates, there's plenty of liquidity at the banks. They have plenty of cash, but it's getting those individuals to start borrowing again, and also those corporates to borrow again. This is the other headwind that is coming down the pike for this summer. And the big question is, how long will this drought in the South last? How long will these power outages and power cuts last? Because essentially, they're cutting, Sichuan government and Sichuan authorities are cutting power to a number of different factories in Sichuan. They've extended those power cuts until at least this Thursday, because water levels in the Yangtze and the other hydroelectric dams around the area have been down about 50% normal levels at this time of year. That is putting a strain on the power grid, as is the temperatures in excess of 40 degrees Celsius that is driving air conditioning use not only at homes in one of the most populated provinces in China, but also at all those suppliers and those factories. So it is going to have an impact on production, but in conjunction with everything else that is going on in China. Zero COVID threats, and the property slump obviously is going to be hurting. This is just one more stress.
how long before China reviews its 5.5% growth projection for the year? Chief North Asia correspondent Stephen Angle, thank you. Now let's get the first word news with Vonnie Quinn in New York. Hey, Vonnie.
Hey, Haslinda, thank you. Richmond Fed President Thomas Barkin says the central bank is committed to taming U.S. inflation, even if that means risking a recession. Barkin says policymakers will do what it takes to return inflation to their 2% target, while acknowledging that a recession could happen in the process. Recent Fed speakers have agreed more rate hikes are needed, while debating the size of the next move. New Zealand's central bank is open to raising its benchmark rate as high as 4.25% amid uncertainty over the tightening needed to regain control of inflation. Deputy Governor Christian Hawkesby has told Bloomberg the RBNZ is being deliberately ambiguous about whether it sees a peak of 4% or higher. Hawkesby says the bank hasn't yet settled on a new estimate for its neutral rate. Japan's government says Prime Minister Fumio Kishida has tested positive for COVID and has relatively mild symptoms. The 65-year-old developed a cough and a slight fever on Saturday night and came up positive in a PCR test. He's currently resting at the Prime Minister's official residence and returns to work remotely on Monday. Germany may not be able to replace all its imports of Russian natural gas this winter and might have to resort to nuclear power. Chancellor Olaf Scholz says there's an option of extending the lives of the nation's 3 remaining reactors beyond December. Europe's worst energy crisis in decades has forced politicians to look at alternatives, including atomic energy, which Germany had decided to exit permanently by year-end. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Vonnie Quinn. This is Bloomberg. Haslinda.
Vonnie, Singapore is upping the ante to attract more top talent amid a global contest for highly skilled workers. Prime Minister Lee Hsien Loong made the announcement during his National Day rally speech on Sunday.
In this global contest for talent, Singapore cannot afford to be creamed off or left behind. This is an age where talent makes all the difference to a nation's success. We need to focus on attracting and retaining top talent in the same way we focus on attracting and retaining investments.
The Singapore leader also announced a move to repeal a colonial-era law banning sex between men. Let's bring in Bloomberg Senior Asia Economy Editor Michelle Jambrisco for more. And it was much anticipated, was not a surprise, and it reflects a changing thinking within the country.
Yes, that's right, Haz, but it was a little bit more complicated than that. Of course, we did expect that 377A, as they call it, the colonial era ban on sex between men to be removed. That was announced, but at the same time, you saw the Prime Minister talking about that tricky balance he has to strike. Throughout his speech, he's talking about attracting top talent and different ways that Singapore will be, in announcements forthcoming, attracting those foreign workers to the shores again. But at the same time, as he's preaching that social harmony and that unity, he also mentioned Singapore's long-held value of the family as an institution, that meaning man and woman marriage, and he noted that he would be enshrining that definition into the Constitution, which was perhaps a little bit unexpected and leaves people wondering, including businesses, perhaps where that stands on attracting same-sex couples to Singapore.
So the Constitution will be amended. What's important to note here is that it becomes a political issue, less a legal issue, and perhaps that is the light at the end of the tunnel.
Well, that's right. And PM Lee mentioned, they wanted to get ahead of the courts on this. He didn't feel that it was the appropriate forum in the courts to debate such a social issue that was much more political. So he took that out of the equation, so to speak, and is now making it a more democratic process going forward in the sense that the Parliament will need to, when they want to, change the Constitution again by a 2/3 majority. So that will be a little bit different, not waiting for a court case to determine that.
Of course, this is all in the context of attracting top talent. The question really is, has Singapore been able to do that? Because we know that during the period of COVID, we've also seen an outflow of top talent. Can he reverse that cycle?
Well, that's right. And that's the big question. I mean, I think from the data, it's very hard to tell right now because you had so many wobbles in the COVID era, a lot of people leaving for different personal reasons and that sort of thing. Singapore does remain, by all counts, a very attractive destination for businesses. But, it's issues like this that remain a little bit cloudy for some businesses hoping to attract top top talent, especially in those next generation industries that Singapore is vying for right now.
We often talk about Singapore versus Hong Kong. Hong Kong experiencing an outflow of talent. Singapore has been at the same time. Is there a sense that perhaps, Hong Kong and Singapore are losing top talent to the Middle East? I mean, we talk about Dubai, we talk about Doha. Is that the trend that's likely to continue?
Well, there is chatter about that, certainly. And I think Singapore and certainly Hong Kong have that on their minds, that they're competing not just with each other, but with global destinations. You have seen Dubai in some ways advance in terms of attracting foreign workers. So I think, again, in issues like this, they want to put more clarity on the issue. For right now, we don't have as much clarity from that announcement last night in terms of how it will impact visas and allowing businesses to actually make those decisions to bring same-sex couples and other foreign workers here. But we do expect in the coming weeks to get a little bit more certainty on that situation.
Clarity, details, that's what the promise. Michelle, thank you. Bloomberg's Senior Asia Economy Editor, Michelle Jamrisco. Still to come on the show, we speak with Nitin Sharma of Antler Global as we assess the overall investment trends in Web3 startups and the broader crypto industry in India. This is Bloomberg.
VK ฟิล์มรถยนต์กันร้อนดีราคาถูกรถยนต์เริ่มต้น 3,000 บาท
When U.S. inflation numbers are released,
a major drop in the headline number.
Bloomberg brings you crucial data at terminal speed.
Yields dramatically lower. Futures dramatically higher. Strong rally. Bam. People are going full risk on.
And instant expert analysis.
At what point does the Fed signal we're done?
The market's not believing that the Fed has yet done enough. One report is not all it's going to take.
When do we get back to boring inflation?
Nobody covers the economy like Bloomberg, your global business authority.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Good morning, India. Just heading into the open of the cash markets in a couple of minutes. It's likely we're going to see a lower open, some weakness coming through after the opening bell. Certainly indications are of that already. And we've come a long way, right? 4 weeks of gains there as far as the benchmarks are concerned. A couple of things to watch here as far as the India agenda is concerned here. You have Dream Folks Services. That's an airport service aggregator platform here. So to set the price, raising some money here, 386 to 409. That's US dollars a pop here. It's an IPO, obviously, that could raise as much as, if they do, price at the top end, 70 million US dollars there for the founders. Gillette India is out with some results. That's for 4Q. And you had the billionaire founder of Paytm has emerged unscathed here, with the majority of shareholders voting to keep him as CEO. That sort of boardroom battle. I was about to say courtroom, but yeah. There we go. Nifty Futures, as you can see, has called lower 0.4%. Has.
Not surprising. That sentiment in line with the rest of the region. Well, until this year, India was one of the fastest growing markets for crypto assets, but that has changed, and that's due to a transaction tax imposed in July. At the same time, the RBI is preparing to launch a digital rupee next year, a potential competitor to Bitcoin as well as Ether. Let's tackle all this with venture capital firm Antler Global, general partner and global Web3 lead, Nitin Sharma. He joins us from Bengaluru. Nitin, good to have you with us. I'm just wondering what you make of the hostility that the Indian government is showing towards the crypto space.
Thanks for having me. It's great to be here. Yeah, it's a mixed bag. This year started with really positive signals in terms of a tax regime for crypto, and a lot of folks actually thought that was the first step towards legitimizing the asset itself. But actually, when the details came out, it became clear that not only was there really onerous tax deducted at source on every transaction, but also the banking relationships for any crypto-related entity remain quite onerous. And apart from what has happened in India, you also have global macro factors and the Terra, Luna, and many other collapses in the crypto industry, just making it really hard for positive regulation right now. So it's a mixed bag. India still remains important to crypto, and crypto remains important to India. But the next 12 to 18 months, I don't expect much positive movement on the regulatory front, at least.
So what do you do if you're a Web3 Indian entrepreneur? How do you adjust?
You build. This is the best time to build. We saw this in the last few cycles, all the great value that was being created. Really, the founders got started in downturns or crypto winters like these. The big success story from India in terms of entrepreneurship in Web3 is a platform called Polygon, and most of your listeners would be aware, if they follow Web3, that this is now the default layer to build on top of Ethereum. It's a network which was valued at $16 billion just before the crash. And so our belief is that India remains a place, given the breadth of the base of technical talent and entrepreneurship, that the future of this new internet, Web3, right, beyond the asset class itself, beyond crypto assets, the technology, the infrastructure that has to be built to make Web3 a reality could in large part be built out of India. And that did not happen in Web 1 or Web 2. You don't have India creating the value that a Facebook or a Google has created in Silicon Valley. And our belief is that this could change, and India could produce $1 trillion tech company in Web3. So if you can take a long view, 5 to 10 years, it's time to build, it's time to invest.
Nitin, David here. If you could be more specific, then where within Web3? You would know, obviously, right? Metaverse, cryptocurrency wallets, blockchain gaming, infrastructure. Where do you think India has the expertise among all those, or all of them?
It's a great question. We're still in very early days. As you might know, less than 1% of all developers in the world are building on Web3. India has the third largest base of developers building in Web3. My estimate is that there are about 20,000 developers in India in some form upskilling or engaged in projects in Web3. So to your question, it is a broad set of opportunities, but I think anything to do with the institutional side, the middleware, tools for developers themselves, gaming infrastructure, all of these are areas where there has been interesting activity. And one of the big differences I see is historically you thought of Indian developers focusing more on the services side of things, the application or services side of things. But there is actually a movement much lower into the stack, into the protocol level, into the core technology itself. So Polygon being a really good example of that. They're actually one of the best teams in the world that's building solutions to scale Ethereum. And that's not just a services side or an application side play.
And Nitin, for investors maybe like yourself or for others that have yet to deploy any money, private money, waiting, I guess, that proverbial buy the dip scenario. Obviously, crypto assets have dropped. Have we seen the down rounds, though?
There has been a bit of lag, as you know, with private markets following public markets. And I would actually argue that the lag in crypto has still not happened, but I think it is beginning to. For some reason, crypto founders have usually started with a larger check and higher valuations than Web 2 founders, as they're now called. I think that gap is beginning to close a little bit. I don't think there's a premium just because you have the word Web 3 or crypto in your PowerPoint deck. But that being said, I think it remains a fantastic set of once-in-a-lifetime set of opportunities. We're talking about a completely new financial system in DeFi and a completely new internet. So I don't think that it's just about valuation corrections. I think the long-term thesis is what investors should be investing in. Obviously, I'm not placed to give any investment advice around liquid assets, but I remain very bullish around startups building in India. And if you can take a five-year plus view, and one thing that helps is crypto cycles are much shorter, right? So the next bull cycle could be 2 years away, be 3 years away. But if you can have that patience, there is a lot of value to be created.
Nitin, one last question. Over the last 2 years, we saw the rise of blockchains calling themselves Ethereum killers. What do you make of that trend?
So that's what's usually called layer ones, right? The folks like Polygon are layer twos, saying that the base infrastructure for settlement of transactions might still be Ethereum, but you can use Polygon or something to scale. And then you have layer ones, like you mentioned. I am personally not very bullish on many new layer ones. One of the things that has to be kept in mind is it's not just about claims around scalability or number of transactions per second, but also the community and the network effect of developers building on top of you. So Ethereum has a wide lead right now. And with the merge coming up in September, it'll be really interesting to see, what we see in terms of new scalability numbers. And personally, I think there's a big lead Ethereum has, but that doesn't mean that in 2 or 5 years that we won't have something that can kill Ethereum. I don't see it right now.
Nitin, thank you so much. Have a great week ahead, sir. Nitin Sharma there, Antler Global General Partner and Global Web3 Lead there. Just very quickly, from private to public markets, we're about a couple of minutes into the session there. As you probably saw, we just flashed that on your screens. Bit of weakness coming through there, and the cash markets over in India. So, yeah, there we go. Nothing really much home to write about, but that's really the move we're seeing across most global equity markets or Asian equity markets as we speak. There's plenty more ahead. This is Bloomberg.
Start เลยด้วยสกอตคิดที่มีไทโรซีนดื่ม
left right
When U.S. jobs numbers are released,
This is quite a surprise. Just wow.
Bloomberg brings you crucial data at terminal speed.
The headline number, 528K.
That takes us back to where we were when the pandemic started.
And instant expert analysis.
That recession talk just got a freezing cold shower.
Powell pivot isn't going to happen, not with numbers like these.
This is the payroll pushback.
When does this become painful?
Quite frankly, the market has 2023 wrong.
Nobody covers Jobs Day like Bloomberg, your global business authority.
Welcome back to the show. Let's get you the latest here on the Iran nuclear deal. President Biden has spoken with other Western leaders looking to revive this, of course. That's just the U.S. ways this responds to Tehran's position on the latest proposal. Let's bring in our reporter here, Bruce Einhorn, with us in our studios right now to get us up to speed. Where are we?
So President Biden spoke with German Chancellor Scholz, with French President Macron, with British Prime Minister Johnson. They discussed the ongoing negotiations. They also discussed other things, such as the war in Ukraine, other issues. Where things stand, Iran submitted a response to a framework that the EU had put forward. So this response from Iran came on August 15th. The EU has said that that's constructive. The US hasn't commented on it one way or the other, but we at least have the Europeans saying that there's reason to be optimistic about something coming out of this. Where it goes from here, of course, still a long way to go.
The thing is, Bruce, the proposal is based significantly on a proposal, an agreement that was put on the table back in March. If Iran had wanted to agree to it, it would have done so.
Well, I think one of the big problems, Haslinda, is that there's one of the major stumbling blocks potentially is that there's a lot of distrust on both sides here. Iran is looking for some provision that would make the U.S., as the Iranians put it, pay a price if in the future a new administration comes in and decides to withdraw from the deal, in the same way that the Trump administration withdrew from the deal in 2018 after it had been approved by the Obama administration. administration. So given that, that level of distrust that exists on the Iranian side, and of course there's a lot of distrust on the American side, I think we have a long way to go before we could say that there's going to be a deal going forward.
All right, Bruce Einhorn in Hong Kong, thank you. Let's do a quick check of the latest business flash headlines. SoftBank-backed ride-sharing company SoCar has debuted on the Korean Stock Exchange this morning. Shares have been swinging while the broader Kospi index retreated. SoCar halved its IPO target ahead of the listing, but CEO Jack Park says he's still aiming to lift revenue to 1 trillion won a year by 2025. He told Bloomberg exclusively that the IPO is just a stepping stone.
We believe that like going public and using IPO proceeds will create a greater value rather than just like waiting for like passively for the like market turnaround. We believe that IPO is just a stepping stone to reach to our end goal and the grand vision.
Warren Buffett's Berkshire Hathaway won approval from U.S. regulators to buy as much as 50% of Occidental Petroleum. Berkshire spent the year wagering more on Occidental after first making a bet on a Houston-based oil company 3 years ago. Occidental stock had its biggest gain in 5 months. Dave, the markets.
Yes, and currency markets are the big ones to watch today, obviously with the strength in the U.S. dollar and one just about on the euro, right? 10-day look, we're flirting with that level yet again here. Parity is what we're talking about. A little bit off highs as Europe wakes up. Sterling, very quickly, similar scale, 10 days too, and certainly higher yields going the opposite way of where the currency is going. We're down 2% over 10 days, and futures as we get into, of course, the thick of things here. There we go. So Asia's down, U.S. futures are down. It looks like Europe might also see some pressure ahead. That's it from us here at Bloomberg Markets Asia. Daybreak Middle East is coming up next. This is Bloomberg.
ไม้สังเคราะห์ SCG ล็อกสีสวยทนจากทุกสภาพแวดล้อมที่มีเทคโนโลยี Color Lock Plus.
At Bloomberg, we believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. It's a community of global leaders and innovators who are blazing new trails to transform business and government. This platform will help them share their ideas with the world and provide access to the resources they need to bring them to life. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
Apple's delaying its next major iPad software update, iPadOS 16, by about a month from September to October. Apple made the decision for a number of reasons, including a still buggy Stage Manager multitasking interface and in order to link the launch closer to the more similar macOS Ventura. Still, it's an unusual move. Since shifting the launches to the fall in 2011, Apple has released its new iPhone and iPad software updates simultaneously each year around September. By staggering the releases, users may find some issues around compatibility with cross-device features like retracting and editing messages in iMessage, the new shared iCloud photo library, and the new feature for transferring FaceTime calls between iPhones and iPads. It will also make it a bit harder for developers to launch apps that run on both the iPad and iPhone that require new APIs and features found across iPadOS 16 and iOS 16. Regardless, it was still, of course, the right move. Stage Manager on iPadOS 16 is still quite buggy. I don't find it particularly intuitive, and it's not compatible with most iPads and many third-party apps on the App Store. The feature clearly needs some more polish. And complaints from consumers about Stage Manager will now no longer probably overshadow the earlier launch of the iPhone 14.
The Indian city of Jamnagar is a money-making machine for Asia's richest man, Mukesh Ambani. His company Reliance has the world's biggest oil refinery complex here in the city. Jamnagar is also where Ambani is making his newest bet, a $10 billion investment in green energy. His ambition is closely aligned with the Indian government's plan to reach net zero emissions by 2070. But Ambani is not alone. India's second richest man, Gautam Adani, has committed $20 billion of investment over the next decade. But India's massive dependencies on fossil fuels have some environmental advocates questioning the realism and sincerity of those green ambitions and those of its two biggest billionaires.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Daybreak Middle East. Your top stories this morning. Chinese banks lower their benchmark rates for the first time in months and step up support for the property market. The bid to bolster waning sentiment amid a power crunch and COVID curbs. But it fails to lift risk mood of markets. Investors now await clues from the Fed's hiking plans from Jackson Hole later this week. The latest Bloomberg MLive Pulse survey shows more than 2/3 of respondents see stocks falling as inflation erodes profit margins. We have the details. Plus, President Biden speaks with fellow Western leaders looking to revive the nuclear deal with Iran. The UAE plans to reinstate its ambassador to Tehran after 6 years. Monday morning, it's just gone 8 a.m. across the Emirates. Very warm welcome to the show. I'm Manus Cranny in Dubai. We have a sense of panic from China, posturing ahead of Jackson Hole, and perhaps a little bit of pain in Europe on the PMIs. And that sets us up for a risk-off narrative across the equity market space. This rally is a $7 trillion rally, driven by U.S. equities. However, this current rally is up 17.4%. Bear market squeezes, and there's been 43 of these since 1929, typically rally by 17.2%. And takes 39 days. But there is a day of reckoning. The big beasts of this rally, as Bank of America call it, a bear market rip. In other words, the flow show says the bear rips are very narrow. And Apple, Microsoft, Amazon, and Tesla took flesh wounds last week. Keep an eye on their stocks. 4 weeks of gains, break of trade on Friday, carries through to Monday morning. Let me show you what's happening in the bond market. We're waiting for Jackson Hole. This is Powell's opportunity to reset the agenda, that there is no risk of the Fed backtracking. A year ago, of course, inflation was transitory, according to Jay Powell. 3% is a whiff for the pension funds. Would they buy 10-year paper if it gets to 3.5%? It's a bloodbath in Aussie rates. We'll talk about that in just a moment. Let me show you how the bond market is setting up. The most bearish bets in the bond market since 2018. So the bond bears are trying to get out ahead of this risk of Jackson Hole. When you look at the oil markets, again, when I set up for Vienna, just over 6 days ago, this market has collapsed by nearly 3%. The risk is Iran comes back. How quickly will they be able to add back their barrels? Goldman Sachs are doubtful that this deal will happen. But the global leaders have spoken, and there are ongoing negotiations. Oil down over the past 6 days by nearly 2.7%. We'll talk to Stephen about that in a moment. Let's get to Juliet Sali. She's in Singapore with all of the Asian market wrap this Monday morning. Jules.
Hey, Manus. Yeah, as you mentioned, we are still looking at traders looking ahead to Jackson Hole. So certainly a bit of a risk-off tone to kickstart the trading week with Asian stocks lower for a third session. That is the longest losing streak we've seen since early July. Japan coming off earlier lows, but certainly that weakness in the Nikkei is weighing on the regional benchmark index. We're seeing some upside here in Singapore, some of the COVID restrictions being eased further, with Singapore saying that they will allow indoor mask wearing to be cut, that mandate to be cut. And of course, we're watching very closely what has happened with the loan prime rates, particularly to the developers. Now, that bigger than expected cut to the 5-year very much supporting a lot of those developer stops. And we're watching the Korean won as well. That is a weakness amongst emerging Asian currencies, amid these concerns about the global growth slowdown. Let's have a look at the toolkit, though, when it comes to China's main interest rate tools. I know you're going to talk about this in more detail, but Rebecca told us earlier that China needs to look past monetary policy and towards stimulus. Tu Ha-Chao saying lots of steps have been announced, but economic data suggests that policies are not really feeding through. So it'll be interesting to see the impact longer term of these cuts to the LPRs. Certainly the 1-year, Manus, was not cut as deeply as the 5-year.
OK, Jules, I have it on good authority. That passport of yours is getting a thorough good whopping at every border that you can get across. Julia Sully there on her travels around Pan-Asia. Tracker on Flygo. Let's get more on the China rate cuts, the loan prime rates. Our chief North Asia correspondent Stephen Engel is in Hong Kong. So these moves show the authorities are prioritising stimulating growth, but is it enough? I sense a whiff of panic when you go for both the loan prime rate and the mortgage rate, and you just sort of throw everything at it.
Yeah, that's right. It's not quite the kitchen sink yet, Manus, but obviously authorities are concerned by the big drop-off in lending that we saw in July. Aggregate financing was way down, but there's plenty of cash at the banks. Either they're unwilling to lend or they can't find too many borrowers right now while the sentiment is so low in the economy, in particular the property sector. So if you look at these two loan prime rate cuts, one less than expected, 5% or 5 basis points, excuse me, on the 1-year loan prime rate. But you have to look at the 5-year, really, and that was 15 basis points, and that's kind of the barometer for the property or for mortgage loans. So that's clear that the authorities want to prop up the property sector, because it's in conjunction as well with this joint statement that came out of the PBOC, the Housing Ministry, and the Financial Ministry late Friday, as quoted by Xinhua News Agency, essentially saying that the PBOC is going to encourage policy banks to do special lending to property developers who have been having trouble raising the necessary funds to deliver these homes that have led to a number of boycotts across China in 90-plus cities. People who are paying, their mortgages have been boycotting because there doesn't seem to be any prospect for them to get their homes delivered, but they still have to pay those monthly payments to a hole in the ground. So essentially, authorities realized that it wasn't the kitchen sink on cutting rates, but it does clearly show that the authorities are very concerned.
And then, obviously, it's a global issue. But in China, there's a particular province that is suffering from power outages, power curbs. It's in southern China. Why is that so materially important, and how severe are these power outages in China?
Well, it's the biggest drought on record down in the south of China, and you have the higher temperatures, which is leading to more, of course, air conditioning use. It's a tax, of course, real pressure on the power grid. And then also you have the water levels, as you're seeing here in the Yangtze River and the Three Gorges Dam. Hydroelectricity power generation is way down as well. At a time, of course, when China is trying to get manufacturing up and going to support exports, but also to support the domestic economy recovery. And this is one of the most populated provinces, Sichuan province, in all of China. It is filled with manufacturing centers as well, suppliers to the electric vehicle and battery makers. Already Toyota and CATL, the big EV battery maker in Sichuan, have had to cut down their production lines because they're not necessarily getting preferential treatment from the power grid, so they have to shut down. So authorities have extended these power cuts to factories through at least this Thursday. They were supposed to end this past Saturday, but again, the grid is taxed right now, and as long as temperatures and these keep on staying high, and air conditioning use is still high, and water levels at the hydroelectric dams are down 50% from normal levels this time of year, that's going to be a problem, and we just don't know how long this drought is going to last.
It's certainly a pretty horrific outlook, isn't it, in terms of the industry side there, Germany and all across Europe as well. Our Chief North Asia correspondent, Stephen Engel, with the very latest policy responses and energy crisis. The Federal Reserve officials and central bankers from around the world will gather at Jackson Hole, Wyoming. And they will be laser focused on Fed Chair Jay Powell's speech on Friday. Our global economics policy editor Kathleen Hayes joins us now. Oh, what a difference a year makes. A year ago it was inflationary, wasn't it? Here we are talking about the risk of 100 basis point hikes. It's still a possibility. Distant, I grant you. Kathleen, good evening. What are you looking for?
What am I looking for? Well, I'm looking for Jay Powell to do what the Fed chair does every year at the Kansas City Fed's annual symposium at the Jackson Lake Lodge in the shadow of the Grand Tetons. Friday morning, the Fed chair opens the proceedings officially with a welcome and a policy message that's as specific or vague as he or she wants it to be. Remember the year that Ben Bernanke didn't exactly say it, but signaled the next round of quantitative easing. QE2 was coming. That was a rather big signal, wasn't it? And then wasn't it 2012 when Mario Draghi said whatever it takes? He broke the bazooka out in Jackson Hole. Now, of course, right now the big question is inflation. How hard does Powell see the Fed's going to have to fight it? Are they close to getting enough done because of some kind of model he presents to us? Or does he signal that there's a lot further to go? And remember, Menace, we haven't heard from Jay Powell publicly speaking since we got those inflation numbers just a couple of weeks ago for the month of July, which showed a break in the headline CPI. And then the next day, some of the producer price portions of the wholesale prices were also looking not quite as red hot. You can see the Fed funds rate forecast here. It took them a while to get it up there, but now they see 4% by the middle of next year. And maybe emboldened by the payrolls report to keep hiking rates because it was double what was expected in the month of July, 528,000. A big question people are going to be looking for, I think, are there echoes, even broadly, of Paul Volcker? Is he ready to risk inflation? Is he letting us know, which to a certain extent he already has, but many people feel that the markets haven't quite gotten it. They still kind of doubt Jay Powell. Does he have it in him to be that tough? Maybe they think he is going to be that tough, and that's why we see some of the moves we've seen in the bond market lately. But Tom Barkin, speaking on Friday, president of the Richmond Fed, he'll be in Jackson Hole. Practically all of them will be. We're committed to returning inflation back to 2% to the target. We'll do what it takes to get there. There is a path to getting inflation under control, but a recession could happen in the process. Don't expect Jay Powell to say anything as specific as, well, you know, I'm leaning towards 75 basis points now. Well, and he could surprise me and do just that. I think, Manasa, something that could be seen as perhaps a bit dovish, if he continues to focus on the possibility of the soft landing, something the Fed thinks it can achieve, is he going to do what the RBNZ did through its deputy governor, Christian Hospi, just today in an interview with Bloomberg News, saying after Adrian Orr kind of topped their official cash rate out at 4% next year, he said it could go to 4.25%. Doesn't sound like a big deal, but I think he's acknowledging that it may take more. Maybe that's the kind of thing we're looking for from Jay Powell.
Okay, and of course, we've yet to even begin to talk about the balance sheet, Kathleen, really in size or in detail. And that could be, you know, the grey swan in all of this. Go on, get one line very quickly.
We haven't even seen the real bulk of the quantitative tightening now, Manis. As you know, the rates of letting it run off are going to expand, speed up exponentially. It will be interesting to see. But the Fed bank presidents are going to speak, may talk about that.
Okay, well, all eyes and ears down on that, Kathleen. Have a good travel. Kathleen Hayes there in New York, finished for the day. She'll keep us in touch ahead of Jackson Hole. And later this week, as Kathleen has said, that Powell speech, as well as the interviews with Fed's presidents from Kansas City, will be tracked right the way across Philadelphia, St. Louis, Cleveland and Atlanta, all speaking, and we will be on the ground with the whole team at Jackson Hole. To the oil market, as I said at the start of the show, we're sliding again at the start of the week. Investors weighing the prospect for more Iranian supply. That after President Biden spoke yesterday with leaders from France, Germany and the UK about the revival of the nuclear deal. For more, let's get to our energy reporter, Stephen Stepczynski. So here we are, Stephen. It sounds as if a global conversation about the reignition of that nuclear deal from 2015 is a lot more live than perhaps we'd already suspected.
Yeah, absolutely. I think we're having the greatest prospects of this actually getting done for years since the Trump administration kind of knocked it out in 2018. The EU officials said that there had been some constructive progress on it when they got responses from Iranian officials. The U.S. has been pretty tight-lipped. So, of course, it isn't immediately clear if something is going to happen. But if you look at oil prices, you see that these discussions between the U.S., Germany, UK, and France has obviously sparked some sort of interest, potentially it's coming back into the market. You've seen prices coming down, coming off of this. We have WTI back below $90. We have Brent at $96 per barrel. And what you could really see is potentially, if this deal is done, Iran replacing Russian flows. You know, Russia is at risk of seeing their production drop pretty significantly if countries do curb purchases. If Europe does move forward with implementing this ban on Russian oil imports and they reduce their production, you could see Iran swoop in by the end of the year if they're able to boost their production enough to really replace that supply and help really balance the market. And things will look a lot less tight than they did previously. So that's why you're seeing that kind of bearish action in the market over the last few days and weeks.
Well, let's see what the week holds. And of course, when I asked the Secretary General that question, which is if Iran comes back on, would you have to cut to facilitate that? Well, he dodged the question in an express answer, but certainly didn't intimate that was part of the thinking. Stephen, thank you very much. Stephen Stepczynski there in Singapore. Let's get the first word headlines from around the world. Jules is with me in Singapore. Juliet.
Manna, Singapore is repealing a colonial-era law that criminalises sex between men. Prime Minister Lee Hsien Loong says removing the legal ban on sex between men is the right thing to do and something that most Singaporeans will now accept. Lee stopped short, though, of recognising same-sex unions, adding that the Constitution will be amended to protect the definition of marriage as being between a man and a woman.
The government will repeal Section 377A and decriminalize sex between men. I believe this is the right thing to do, and we need to find the right way to reconcile and accommodate both the traditional mores of our society and the aspiration of gay Singaporeans to be respected and accepted.
Japan's government says Prime Minister Fumio Kishida has tested positive for COVID and has relatively mild symptoms. The 65-year-old developed a cough and slight fever on Saturday night and came up positive in a PCR test. He's currently resting at the Prime Minister's official residence and is expected to resume duties remotely on Monday. And in the UK, Rishi Sunak has told Liz Truss, his rival and the frontrunner in the race to become the next Prime Minister, that she can't deliver both support for struggling British households this winter and stick to her flagship policy of tax cuts. The cost of living crisis caused by soaring energy and food bills has become a key point of difference in the two candidates' campaigns to replace Boris Johnson. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Manus.
Jules, thank you very much. Still ahead, we discuss the fixed income space with the region, with Arkham Capital's Abdul Khader Hussain. Up next, markets risk-averse this morning ahead of Jay Powell's speech at Jackson Hole. Is the summer of love over for stocks? Well, we'll put that question to the Commercial Bank of Dubai's Head of Investments, Deepak Mehra, right here on Bloomberg.
VK ฟิล์มที่ช่างติดรถยนต์แนะนำติดง่ายกันร้อนดีราคาถูก
We believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. This platform will help them share their ideas to reshape our world. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
So let's
go inside the boardroom. Let's suppose you win a proxy fight and or you just get invited onto the board. You go to your first board meeting and you're the person who's saying you can fix this company, and all of the others on the board of directors are saying, well, we're doing pretty well. How do you get received when you start saying, here's what I wanted you to do?
Well, first of all, we don't bring that to the boardroom. Our time is spent with the CEO, the chairman, the CFO, and share our plans with them outside the boardroom. We try never to solve an issue in a boardroom. Okay, it's always best done the day before, the week before, outside that room. We wouldn't be there if they really were doing well. So it's really hard for them to straight face and tell us we're doing well. And we present them with a plan.
Ken Griffin is moving both Citadel and Citadel Securities to Miami. The scoop was broken by Bloomberg's Amanda Gordon.
From the world of politics to the world of business. Balance of Power with David Weston. News, analysis, insight from and about politics power players. Weekdays, this is Bloomberg.
This likely recession that we're heading into is largely supply-driven, supply shortages.
Recession certainly is a potential cure for inflation.
The medicine is probably supply-side related. Supply problems require supply solutions, not something that monetary policy is apt. And so driving a recession is really a poor and suboptimal outcome.
There's no need for central banks to ram a recession down the throat of economies that simply do not need rates to be moving higher.
We just need a period of absorbing and also allowing some of those mechanisms to work its way through.
I actually think the U.S. economy can withstand much higher interest rates than I think people give it credit for.
Various investors there on whether they think a recession is necessary to rein in the red-hot prices. And it has quite literally been a summer of love for both stocks and corporate bonds. Both recession fears are threatening to split the two up. It could be a messy divorce. Equities are set to fade on the earnings pressure and a hawkish Fed, and the bond markets, well, they could extend their rally as investors take cover from risk. All to play for. Deepak Mehra is the head of investment at Commercial Bank of Dubai. Deepak, great to have you with us. There was a bit of a shudder, one could say, on Friday. The nirvana was broken, 4 weeks of gains. Is the summer of love over for equities? Were you ever in love with these equities?
Absolutely. I think we are very much in love with the equities, and I think these opportunities are great for long-term investors to pile up again on high-quality growers. So that's great, but I think the markets did run up beyond themselves with a 20% gain in a few weeks.
But it was a very narrow rally, and this is what the flow show from Bank of America talks about. They talk about a rip, a bear market rip, and it was predicated around Amazon, Microsoft, Apple, and Amazon. Those four stocks, and Tesla, excuse me, Apple, Microsoft, Amazon, and Tesla, were 30% of the gain, and 86% of the global rally has been in the US. Now, that says to me it was a very narrow bandwidth of a rally.
Absolutely, because the market is not listening to the Fed. The Fed is very clear. The Fed does not want to leave its job half done. The sticky factors of inflation, which is shelter and food, are still not coming down. Energy, which is just about 15%, energy and transportation, which is about 15% of the CPI, is where we have seen improvement. 50% of the CPI is shelter and food. Remains very sticky. So the Fed will probably increase rates beyond the level that the investors have anticipated.
Is that to tighten up FCON? Because FCON is still, I'm furiously trying to do two things at once. I'm trying to look for my FCON GTV, but FCON is still loose, if not near to neutral. Is that what they're going to focus on? Evans is talking about 4% in rates. Do we need to get to 4% to tighten FCON?
Yeah, absolutely. So I think Fed remains data dependent, but as Mary Daly said, the San Francisco Fed president, they are data dependent, but not data point dependent. And I think that's where we're missing a point. And they have a playbook of Paul Walker. They don't need to go there, But 2% is still very far off.
They're not. No. They're not playing Paul Volcker's playbook.
Yeah, absolutely not.
No, they're not. Because Volcker was completely dispassionate. Go back and listen to his conversation with Ray Dalio, talking about, needing an excessive level of unemployment. Today's society is not capable of taking a Volcker-style hit.
So the Fed has two mandates, full employment and inflation. Employment is not an issue. So the only mandate left with the Fed today is inflation.
But in terms of there's the financial conditions now, as you can see, and they are louche, one would say, in the face of a tightening Fed. Tell me this, the dollar is having a cracking run. The bond market's wobbling. They're beginning to set up for shorts on the bond market. How do you position into this Jackson Hole? Do you wait and see what the language is and then decide?
I think we wait. And as wealth managers, we've been picking up high-quality growers, what I call the mama stocks, the Meta, the Amazon, the Alphabet, the Microsofts and Apples and so on. And every dip is a buying opportunity. Are we out of the bear market? We don't know. But we can keep buying because we are long-term buyers. And these are great opportunities to dip in. But yes, right now we will wait till Jackson Hole and probably till September to see what data pans out. And
do you, when you come in this morning and you sit down and you see the Chinese have gone for a cut in the loan prime rate and in the mortgage rate, and as Stephen Engle quite correctly said to me, they didn't throw the kitchen sink at it, but I'd say that they threw a lot.
Oh, they need to.
Okay, they need to. Do you think they're panicking?
They are. Everything is going against them. Everything, the macro, the micro, everything is against them. Look at their population, working age population is shrinking. Look at the youth unemployment. Look at the COVID lockdowns. One or the other province is still in a lockdown.
Was it you who said to me the last time you were in you could live without China in the portfolio?
Absolutely. It
are you sleeping at night easy without China in the portfolio?
Absolutely, very much.
But how do you look, if you don't want China in the portfolio, I mean, you can't just throw the whole of Asia out with the bathwater, can you?
Well, there could be pockets in Asia which are more domestically oriented. We could go for those economies rather than the ones like China, which have been developed purely on exports and domestic investments. Both are not going to come and grow the way they have been in the last 2 decades.
What does that do to commodities for you in terms of exposure?
I think the markets are already voting for that. And we can see oil coming down. We've seen the base metals, industrial metals, everything.
And yet the data shows that the fast money is building up their positions again, slightly long on commodities, or is that just a fast trade? Trashy trade.
Absolutely. Commodities are completely done on paper. It has nothing to do with the physical demand and supply.
Those awful, terrible traders, they're nothing to do with reality. But the more significant trade, as it were, or I would say directional sentiment indicator for me, is the yield curve 2s, 10s. Okay, so it has already inverted a great deal. I think our story this morning is, look, it's already very well primed for a deep slowdown, 50, 55. I mean, you can quibble with me and quote me where the 2s, 10s are. But the question is, do you think at 50, 55 double nickel, you're sufficiently priced for quite a hardish landing?
Well, that depends how the Fed maneuvers it. But 10-year Treasury yields today have become an indication for long-term inflation expectations. And you can see 10-year yields coming down even when the interest rates are being increased. Rates will be increased more than the market anticipates. There will be a recession. We are already in a technical recession. We will engineer a deeper recession if required. But there was no better time for the US to have higher rates when you have such strong consumer and company balance sheets. So yes, that is very likely what you just...
We don't have time to spar, but I do challenge you on that. The reason why long-term rates are coming down is pure fear, buddy. It's nothing to do, we got past the inflation thing. We're in rabid fear between Taiwan, US, China, and Ukraine, and Europe. But
as well.
That's for another day. keep buying the dip. Okay, we'll leave it there. Deepak Mehra, my guest this morning, a great conversation there on investment from the Commercial Bank of Dubai. Quick snapshot of risk. If your pockets are deep and you like a swoon and a boon, jump in, says my guest, in terms of equities. Is the summer of love over? 4 weeks of gains. SPOOs dropped by 1.2% on Friday. They continued lower this morning. The average bear market rally since 1929 has been 17.2% in 39 days. So far, 41 days, 17.4% of a rally. We call it a bear.
VK ฟิล์มที่ช่างติดรถยนต์แนะนำติดง่ายกันร้อนดีราคาถูก
You will shed light on dark matter. You will make aging optional. Because when you subscribe to Bloomberg, you won't just get news. You will get insight into limitless possibilities. Before you change the world, Bloomberg.
No one covers the world like Bloomberg.
There's a sense it'll get to 7% in the coming months. Do you see that coming true?
There was something of a grey zone battle between Taiwan and China.
Where are the job cuts to come from? We will not just cut and run.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority. Innovation, money, and power collide in Silicon Valley and beyond. Bloomberg Technology with Emily Chang. Weekdays at 5 p.m. in New York and 2 p.m. in San Francisco.
Bloomberg Green, bringing you the business, data, and innovators fighting climate change.
Reinventing climate news on TV, Quick Take, and Bloomberg.com.
The difference between endless research and a winning strategy. To improve your firm's productivity and profitability, Bloomberg Law combines the latest in AI-powered tools and in-depth analysis to accelerate the research process. To grow your practice and make better use of your valuable time. The difference is Bloomberg Law.
This is Bloomberg Daybreak Middle East. Our top stories this morning. Chinese banks lower their benchmark rates for the first time in months and step up the support for the property market in a bid to bolster waning sentiment amid a power crunch and COVID curbs. But it fails to lift risk-off mood in the markets. Investors now await clues on the Fed's hiking plans from Jackson Hole later this week. The latest Bloomberg MLive Pulse survey shows that 2/3 of respondents see stocks falling as inflation erodes profit margins. Plus, President Biden speaks with fellow Western leaders to revive the nuclear deal with Iran. The UAE plans to reinstate its ambassador to Tehran after 6 years. Markets are moving. Let's get to Juliet Sally. She's putting it together in Singapore. Jules.
Hey, Manus. Well, certainly the global growth concerns are still very much weighing into investor sentiment, and you can see that reflected in the FX column today. We've got the South Korean won weakening by around 1% against the dollar and really leading these EM currencies lower as we look ahead to Jackson Hole. It is broadly a down day in equity markets too for a third session, and that's the longest losing streak we've seen on the regional benchmark index since early July. So the big markets, the likes of Australia, Japan, very much weighing, but you can see some upside on China's market after the cuts to the LPR rate. So we are seeing those building stocks rally today. A little bit of upside coming through in Hong Kong as well. And there's some gains in Singapore here too, as we are hearing that the indoor mask mandate will soon be lifted. When it comes to the bond market, you talked about that earlier, this big rally that you're seeing across yields as markets try to reprice ahead of Jackson Hole this week. And we're seeing Australia's 10-year bond yield up by about 12 basis points, Manus.
Yeah, that is shifting gears and a half, isn't it? So, Jules, talk me through what the analysts are saying about this LPR cut, and what will that translate in terms of the economy?
Yeah, absolutely. I think most are saying we need more, and we need more central bank government, central policy coming through from the central bank, I should say. We had that surprise cut to the MLF last week, so it was no surprise that you would see the banks follow suit. But the cut to the 1 year was a lot shallower than what we saw to the 5 year, that 15 basis point cut, which is going to help out the mortgage holders. But of course, a lot saying that that's not going to do much in terms of changing the dial when you only had the 5 basis point cut to the 1 year. Rebecca told us that China needs to look past monetary policy and towards stimulus from authorities. ANZ is saying, look, this isn't really going to change the dial in terms of property bonds, because if property sales don't improve, then developers' refinancing capacity remains limited. And Bloomberg Intelligence also saying that markets are a little disappointed by the smaller than expected 1 year cut. Let's flip the board and have a look at the weakness that we have seen, particularly to these developers over the past 12 months. A drop of nearly 38% in that Bloomberg index, which is gaining today. So certainly outperforming the losses that you've seen on the MSCI China Index and the CSI 300. Manus.
Jules, thank you very much. Juliet Sally there, keeping us abreast of all the market moves in Asia. Here in the UAE, there has been an announcement. The ambassador to Iran will return to the country within days after 6 years of absence. Simone Foxman is in Doha. So, Simone, this seems like a warming of ties between the two countries, but I would say it's that and it's progress of a huge shift over the past 12 months in UAE foreign policy overall. But the timing is significant, isn't it?
Yeah, that's true, because it's occurring as we're seeing the likelihood of a return to that 2015 nuclear deal potentially arising. But really, as you mentioned, this is the culmination not just of 12 months of improving relations between the UAE and Iran, but 3 years of concerted efforts to try and come back, improve that dialogue. And it follows Kuwait restoring its ambassador to Iran, and just earlier this month, a sign that the Gulf is more willing to try and control its relationships with Iran rather than rely on other global powers. The emphasis from the UAE side has really been on boosting trade and investment. Yes, Dubai is a very important conduit for Iran to, have trade with the rest of the world. And of course, that's important for Iran, considering the kind of economic depression it's been in. But yes, we think of this in the context of that 2015 nuclear deal revival. We've heard a lot of optimistic language from the Iranians. We've also seen some sort of progress in recent days, but the certainty of this deal not there yet. The U.S. has remained relatively mum on its level of progress. So we're continuing to see the Gulf try and engage with Iran rather than necessarily rely on the outcome of that deal.
And the economy, I mean, if we talk about Dubai and the data on the inflation side, again, this is finally a bit of a catch-up here in terms of our inflation narrative relative to the rest of the world. How high did inflation come in at?
A whopping 7.1% year on year in July, that up from 5.8% back in June. The key drivers here, 3 key things: transportation, potentially a rise in those fuel costs leading to that, recreation and entertainment, and then food and beverage. This actually is a number that puts Dubai ahead of the rest of the Gulf, ahead of even Qatar in terms of overall inflation numbers. Part of this could be that Dubai is not as subsidized in terms of overall fuel costs as somewhere else in the Gulf. One thing I did note, however, yes, we've seen a strong property market in Dubai, but prices there just up about 0.9% year on year. So as strong as that market may be, the overall discussion here, really food and fuel, much like the rest of the world, Manus.
And to Israel, the central bank there will give its policy decision a little bit later on today. So what do we expect?
We expect the 4th straight hike for Israel's central bank. That puts this on the longest tightening cycle since 2008. Economists virtually unanimous in seeing a 50 basis point hike here, bringing us up to 165 basis points this year. The explanation, though, if we look at our GTV Go chart, is pretty obvious. We are well above the 1 to 3% target that the Bank of Israel looks for on an inflation basis. We've seen higher than expected inflation, but also higher than expected growth and labor data. But watch out for the shekel. We've seen some of the strongest numbers of the shekel against the US dollar in several months, in at least 4 months. That may constrain the overall inflation numbers going forward. But we also could see moves there today, Mattis, in the overall trading.
OK, we'll be all eyes down. We'll catch up on the shekel tomorrow, see what the response is, as you say, from the Bank of Israel. Simon Foxman at the Qatar Financial Centre in Doha. Well, the debate around the Fed Chair Jerome Powell's narrative for this week and the chance to reset expectations is the only thing financial markets are interested in as the central bankers gather in Jackson Hole, and that is amid runaway inflation, a slowdown fears globally. Now, my next guest says if the Fed pivots, it's based on 2 factors. Let's ask them what they are. What does the Fed need to see for a pivot? Abdul Qadir Hussain is the Managing Director for Fixed Income Asset Management at Arkham Capital. Abdul Qadir, great to have you with me. So what does the framework, what data needs to be printed for the Fed to pivot? Because the whole market is pretty much assuming there will be no pivot at this juncture. It's too early.
Yeah, and I think we would agree with that. I think the 2 main factors, obviously, inflation data. I think there's an argument to be made that we're already starting to see the peak on that. We've seen core PCE come off. We've seen inflation break-evens come off. But I don't think we've seen enough weakness in the core economy in the U.S. Your previous guest mentioned unemployment. The employment market remains relatively strong. The consumer remains relatively strong. Retail sales data was okay. Sentiment data was okay. The housing market may be starting to show some early signs. But I think that there is still enough strength in the underlying economy, and inflation, even though it may have come off its peak, is still high enough that we feel the Fed pivot is still a while away. I think they're going to err on the conservative side and make sure that they've really got this in control before they give any indications of a pivot.
Look, we've often heard the word expeditious. So with expeditious in mind, do you think that they jump through the window of tolerance and do 75 in September? Because 75 might not necessarily unseat the bond market or invoke a tantrum, would it?
No, I think it probably would potentially invert the curve a bit more. I think the market would, if they did 75, the risks of a hard landing, would increase a bit more. Our case, I think, given the fact that we did see a little bit of a rollover in inflation data over the last couple of weeks, I think our base case is that they probably do 50. And then they do 25 again in the last 2 meetings, so 100 more for the remainder of this year. So I think if they did 75, I think that the reaction in the bond market would not be too averse, but I think the curve of it would probably invert a bit more.
Let's dig into the markets a little bit. First of all, at the broader level of the emerging market, you see quite significant yield compression in the EM space. I know that you've identified this. We've come in from, nearly 500 basis points to just over 413. And the question is, if we only have another 100 basis points of tightening left to come, what does that do to the EM spread compression?
Yeah, and I think that's the main issue there. I think that the EM spread compression that occurred in August. I mean, you've had a pretty strong rally in the bond market since pretty much July and all of July and most of August. And the one in July was driven primarily by declining long-term yields. But in August, you've seen significant compression in spreads, and I think that's been on the back, obviously, of the great risk rally that we've had in equity markets across. So I think our view is that just like we mentioned earlier, where the risk rally in equities may have gotten a little bit ahead of itself, we think that the rally in credit spreads is probably also a little bit ahead of itself. And I think we probably are going to take a bit of a pause here on how tight those spreads have become.
Now, of course, we're just showing that chart that you'd sent us, which is that EM compression. So if we take a little bit of a pause, and it looks as if it is doing that right now. If we transfer that spread compression that we have seen into some of the more localized markets, Abdulkader, if I look at the belly of the curve, which is 5-year, and this is where you identify as being where you want to be most comfortable, particularly in Saudi and in Abu Dhabi. So what do you want to be long? High grade in this region? What's backing up those two calls on Saudi and the UAE 2027s?
Yeah, I use that primarily as an example in my piece for the one fundamental difference that has happened in the bond market, and that is that the defensive characteristics of the market have increased significantly. You now actually earn some yield in high grade, relatively shorter duration stuff, which a year ago or 9 months ago you didn't. So you had no protection at all against any kind of rate moves. Now you have that protection built in, and we think that a portfolio that potentially barbells, some of these short-dated, high-grade bonds along with high-quality, high-yield, again, short-dated, high-yield places where there is low refinancing risk, potentially some of the perps in the market. We think that strategy is the right strategy, given the fact that we're probably in for a little bit of uncertainty over the next few months in terms of both credit spreads and potentially more interest rate volatility as the market figures out, that the Fed pivot may be later than some people are expecting.
And of course, this all, coagulates around your view on duration. So just update us on that view. Charlie Evans is talking now about rates or terminal rates getting up to 3 3/4 / 4%. How does that affect your view on duration? So no pivot, another 100 basis points to come, which is a little bit less than what Charlie Evans is talking about. So what does that do to duration?
Yeah, I think we've pushed duration for the last couple of months in our portfolios and in the chats that we've had with investors. I think we've become a little bit more cautious on that stance now. I think not so much in terms of that we expect the long end to fly away, but we think that the risks are a little more balanced, and the fact that you can actually earn decent yield in the shorter part of the market, and the fact that I think that at this point there is we feel risk prudence is the way to go. We'd rather stay anchored in that short, in the belly, around the 5-year spot in both high grade and high yield, rather than try to push out and capture yield along the curve in the region.
Okay, Abdulkader Hussain, let's see what Jackson Hole brings to the market this Friday and the definition of the propensity for pivot. Abdulkader Hussain, Managing Director, MD, Fixed Income Asset Management over at Arkham Capital. My guest this morning on the fixed income markets here in the region and beyond. This is Bloomberg.
VK ฟิล์มที่ช่างติดรถยนต์แนะนำติดง่ายกันร้อนดีราคาถูก
We believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. This platform will help them share their ideas to reshape our world. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
Everything you need to get set for the start of U.S. trading. Bloomberg The Open with Jonathan Farrow. Drilling down on the numbers and preparing you as only Bloomberg can. Weekdays on Bloomberg.
terms of what happens politically and then what the economic fallout is.
This week, as the world watches inflation rise, employment rebound, and fiscal policies react, all roads lead to Jackson Hole for the Kansas City Fed's 2022 Economic Policy Symposium. Bloomberg's all-star team is live as policymakers and financial insiders discuss the economic issues and solutions that keep the world's money moving. Coverage starts August 25th on Bloomberg Television and Radio.
Let's get a quick check on the latest business flash headlines from around the world. Warren Buffett's Berkshire Hathaway has won approval for U.S. regulators to buy as much as 50% of Occidental Petroleum. Berkshire spent the year wagering more on Occidental after making a bet on the Houston-based oil company 3 years ago. Occidental stock had its biggest gain in 5 months. United Health, Amazon and CVS Health and Option Care Health are said to be among the bidders for Signify Health. Sources tell Bloomberg the United Health has submitted the highest bid in excess of $30 a share. Amazon's offer, that's close behind. Signify is also holding a board meeting today to discuss the bids. And the debut of the prequel to Game of Thrones drew thousands of users to HBO Max on Sunday, overwhelming the streaming service. More than 3,000 outages were reported across the global monitoring service Down Detector by 9 p.m. in New York, just as House of the Dragon was released. The new series premiered more than 3 years after the last episode of Game of Thrones, which drew in more than 19 million viewers. So make sure you were tuned in for that. Credit Suisse names Dixit Joshi. Breaking news on Credit Suisse. A new CFO. Of course, Credit Suisse very much in the newsline. Bloomberg story over the weekend about the scale of the changes. Rip that investment bank apart is the news flow. So there is a new CFO. Of course, there is a new CEO, Ulrich Körner. He was announced when I was in Switzerland just 3 weeks ago by the chairman, Axel Lehmann. So Ulrich Körner has appointed Dixit Joshi as Chief Financial Officer. Credit Suisse asphyxiated by a lack of decision-making and an investment bank which we understand is to be severely downsized. And of course, the question is to what scale will they downsize the investment bank in terms of the number of job cuts. Ulrich Körner oversaw 16,000 job cuts at UBS when he was there. So that's the breaking news on Credit Suisse. Battered and bruised, the SPAC business is gone, China is slowing down and deleveraging is everywhere. A new CFO, a new management team taking to the helm at Credit Suisse. Let's talk more about our markets here in the Middle East. We've got our equities reporter, Farah Al-Barahi, around the desk with me. Farah, good to have you with me. Egyptian stocks, I want to focus there. A very turbulent week last week with the resignation of the central bank governor, the appointment of a new one, and a lot of volatility. How does all of this play into the equity narrative?
Surprisingly, Manus, the equity market has held up quite well since all of the turmoil that we've seen at the central bank towards the end of the week. The day the central banker resigned on Wednesday, we saw stocks surge, and yesterday again, after Egypt kept its policy rate unchanged, stocks had soared again. So up 5% since Tariq Amer put in his resignation. I was just discussing this with strategists, and they think what's happening here is locals are actually flooding into stocks to sort of protect their savings against not just inflation, but any of that uncertainty that we're seeing on the monetary policy front in Egypt. It's kind of similar to what we're seeing in Turkey. So I found that pretty fascinating, actually.
And in Saudi Arabia, could it be that IPOs are losing their steam? I mean, there's a natural moment of where things slow down. Ironically, it's been quite a busy time while the rest of the world has slowed down. So are we hitting the pause button in Saudi?
To some extent we are, Manus, I would say, especially if you compare it with the start of the year. IPOs have slowed down in several metrics. We have the sizes of the IPO being pretty small. Nothing has surpassed $400 million in the second half. We have the first day performance actually on average half of what half of the returns of what we're seeing on the first day, again, since the start of the second half. So it's a little bit of that summer lull that we know comes in Saudi Arabia. It's a very retail-heavy market. A lot of them are probably in Europe and all around the world and not really trading. So maybe that's what we're seeing as well as the oil price drop.
And finally, quite a lot of M&A on the agenda just ahead of the market opening. What are we focused on?
Well, the key one will be MR, of course, after saying that it's selling a stake in Namshi to Noon.com. This is a $333 million deal, and CI Capital had said that actually might use some of those funds to pay for its Dubai Creek Harbor acquisition. So that's one to watch out for, see how the share price reacts, as well as Mahara Human Resources yesterday, one of its units acquired a 40% stake in another company and another insurance merger in Doha.
Okay, ring that bell for M&A. Farah, thank you very much. Farah El-Barahi on the stock story here in the Middle East. Now, despite rising inflation, fuel prices, borrowing costs, it seems that the supercar market is holding up just fine. Lamborghini set new records for the first half of 2022, concluding the best 6 months ever on sales and profit. And the CEO caught up with Bloomberg on Friday.
Let's speak about 2022. No, we had the best first 6 months ever in our brand's history, in our company's history. As we speak, things are going strong. Every day we sell more cars that we are able to produce. We are doing a lot in the next couple of years. We will hybridize all of our lineup. And the year 2023 is very important for us because we will unveil the all-new Aventador with a V12 and a plug-in hybrid system, but it's also a very important year in the history of Lamborghini because we are going to celebrate our 60th anniversary. So if the economy is holding a bit, then we have no fear that this will be a fantastic year also in the year 2023. Yep. But it's very difficult to make a forecast because of all the things you know better than me.
Stefan, okay, well, it's Guy in London. Let's talk a little bit about that as well. You talk about the macro environment. It could get significantly more tricky. You've only got to look at what is happening in Germany and Italy to get an idea of the fact that the consumer is starting to feel squeezed. Even the high-end consumer is having a tough time increasingly. Stefan, what kind of a year do you think you're going to see next year? What do you think is going to be possible?
As I said, it's very uncertain. It's very difficult to make a forecast because also today, with high interest rates and high inflation, we are still going strong. Also with the prices of energy skyrocketing, especially in Europe, we have not seen any slowdown yet. And this is a very positive sign, but it's very difficult that we can make a forecast for 23. I can tell you that we have a very solid order bank, which is reaching out already at the beginning of the year 2024. So we have covered 18 months of our production. So if there are not big banks happening, we should be fine also for the year 2023.
The Lamborghini CEO there, bullish as ever. Stefan Winkelmann speaking to Bloomberg's Guy Johnson and the team. I suppose really when you're buying a Lamborghini, the cost of living crisis isn't necessarily top of your agenda, is it? It's a new regime at Credit Suisse. We know that. Thomas Gottstein stepped down. The patience of the institutional investors was worn out. In come the new brigade. We have a new CFO coming in from Deutsche Bank. Dixit Joshi joins the team from Deutsche Bank. So he's taking up that role as CFO on October the 1st. Now, then we have Francesca McDonough. Now, she had her joining Credit Suisse had been announced in the spring when I was there in March time. Now, she will come in as Chief Operating Officer in September the 19th. She formerly, of course, ran Bank of Ireland, stepping into the shoes there. We also have a new interim CEO of the asset management division. Ulrich Kunter, who's now the CEO of the whole group, came out of the asset management division. So Michael Rongetti is going to be the interim CEO over there. I can tell you, Credit Suisse, even since that massive shake-up where Thomas Gottstein stepped down, and the chairman sat down with me justifying the decision. The stock has still not managed to catch a bid. So there is a lack of belief in, A, the appointment of Ulrich Körner, and just how deep a gutting of the investment bank or restructuring of the investment bank is necessary to re-establish equity value, long-term incentive value, and a reason to stay at Credit Suisse if you're in the investment bank.
VK ฟิล์มรถยนต์กันร้อนดีราคาถูกรถยนต์เริ่มต้น 3,000 บาท
At Bloomberg, we believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. It's a community of global leaders and innovators who are blazing new trails to transform business and government. This platform will help them share their ideas with the world and provide access to the resources they need to bring them to life. Bold thinking, breakthrough action, Bloomberg New Economy Catalyst.
McDonald's is more than 60 years old now.
Yep.
What is it that made McDonald's by far the biggest of the fast food companies?
I think it starts with the brand. I mean, we have a brand that is one of the most valuable brands in the world. It started with, I think Ray Kroc recognized the importance of ubiquity. And so that was part of the genius or genesis of doing a franchise model, because with a franchise model, he could get capital deployed, get restaurants built more quickly than he could if he was trying to do this all on his own.
There's been a greater interest in the United States and maybe around the world in healthier eating.
Yeah.
Have you tried to reflect that in your menu?
I'd say, you know, what we try to do on our menu is to have choice. So we have a variety of things on our menu, from more indulgent items to, you know, healthier items. And, you know, it gets back to, again, what sells gets on the menu and stays on the menu. What we have seen consistently is, as we've tried to broaden more of what, you know, people might say are better for you items, there's just not as strong a demand for them as there are for some of our iconic classics. And so, you know, we're not in the business of telling people what they should or shouldn't eat. Our view is, our obligation is to provide them with total transparency on nutritional information to make sure that we afford them choice, but ultimately what the consumer buys is up to them.
Welcome to the world of decentralized finance. Bloomberg's covering all things crypto, the people, the transactions, and the technology. Bloomberg Crypto, Tuesdays.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Daybreak Europe. I'm Danny Berger in London with Manish Krani in Dubai, and these are the stories that set your agenda.
Seeking stability, China cuts its benchmark lending rates. Beijing looking to boost an economy saddled by COVID measures and a worsening housing crisis. Sentiment restrained, U.S. futures and Nikkei index in the red as investors look ahead for further Fed tightening indicators at the Jackson Hole summit later this week. The nuclear option. German Chancellor Scholz weighs in on using atomic plants to plug the energy gap as gas supplies continue to fall short. Danny, a very good morning. The question we need to ask ourselves is, this summer of love over for the stock market? Could Jackson Hole prig our very tight market rally?
Yeah, with the summer discontent spreading more widely. Well, so far this morning, Manis, we are looking at both European and U.S. futures down again. It was a pretty dramatic fall on Friday, more than 1% for the S&P 500 benchmark, more than 2% for NASDAQ. So let me show you where we're at. We are seeing a lift of China stocks. It's that surprise LPR cut, giving a boost to some of the property developers there. So that's the outperformer. We'll get more from our team on that in just a bit. European stocks off 1/3%. We've had a lot of calls from various analysts saying it is time to get more negative on European stocks. And again, Manis, here goes to what you're saying. Are we going to get a narrative change from the Fed with a market that perhaps there's a bit of a disconnect or doesn't believe the Fed can continue to be as aggressive? Losses of at least 0.5% for both the S&P and NASDAQ futures, Manis.
Yeah, I just wonder how he will buy optionality with tightening the screw and discounting or batting away 100 basis point hike as being a risk. So how do we set up this week as we go in? So we've got yields rising. By the way, the market is the most bearish on the bond market since 2018. The net shorts are the most bearish since 2018. Brent collapses by 1.29%. Iran oil barrels could come back on the market. How quickly can they add back another 1 million barrels? Goldman Sachs worry about that. We'll talk more about the negotiations between the big four in just a moment. The dollar remains resplendent. No sense of exhaustion. Will Stephen Gallo prig the rally in the dollar? Up 2% last week, the biggest since April 2020. Front load and rally on a risk-off narrative is how the dollar is performing. And cable comes back to flat. The question you need to ask yourself there, is this sterling anemia, or is it just triumphant dollar strength? What is it that drives the next leg in sterling? Danny.
Yeah, certainly will something we'll definitely ask Stephen Gallo about. Well, first, let's get to reporters from around the world, Manis. We have Enda Curran in Hong Kong on Beijing's latest rate moves. Juliet Sally, she'll be looking at some of the big Asia moves, of course, out of Singapore.
Stephen Tuchinski, as ever, looks at the German energy crisis. Lizzie Burden is on tour. She's in Felixstowe, where the labour strikes are set to threaten the UK supply chain. So let's start with China. They're seeking to stabilise the property market as the economy struggles. The banks have lowered their benchmark lending rates, and the authorities are stepping up the support with additional loans. Let's get to our chief Asia economics correspondent, Enda Curran. Enda, how far do these measures go as putting a floor under the current set of woes in the market?
Well, they're more than expected, Mama. So they've brought down the lending rate, that's the benchmark for 5-year mortgages, by 15 basis points. That was a bigger cut than anticipated. And at the same time, the second thing that's happening is they're now coming up with ways to funnel funds into property developers to ensure that those troubled property projects get finished. So it speaks to two things. A, of course, additional support for the real estate sector and the broader economy, but B, perhaps most importantly, this sense of urgency now that the central government is increasingly intervening in trying to ensure there is a floor put under the economy. We know the real estate drag continues to worsen. We know the ongoing impacts from the lockdowns, the rolling lockdowns and restrictions around containing COVID. All of that is putting much more pressure on China's economy than was expected. This time of the year was meant to be something of a recovery period for China's economy. We know that's not playing out in the data, and that's why we've seen the central bank and both the banks, the lending banks, take the steps that they have this morning.
All right, Enda, thank you very much. Bloomberg's Enda Curran. So that's the scene for us. Let's get to the market reaction to what Enda was just describing with Juliet Sally, who's in Singapore. Jules.
Well, Danny, we know it's a dollar strength story, but certainly the offshore yuan weakening quite significantly against the dollar on the back of this move. It's actually now holding around a 2-year low against the dollar. 6.845 is where we trade, and we had a fixing from the PBOC pretty much in line with consensus, and that is giving market participants some kind of idea that perhaps the PBOC is okay with the yuan here depreciating a little bit further. Let's flip the board and have a look at what else we've seen, because of course there has been a big rally coming through in a lot of these developer stocks on the move, although Bloomberg Intelligence saying a little bit of disappointment with the small cut to the 1-year LPR. This index, though, up by around 1%. Remember, it's lost about 30% over the past 12 months. China stocks also getting a boost on the back of this, although Rebecca told us we really need to see more stimulus coming through from government authorities rather than a monetary policy, because the data is clearly showing that the cuts in terms of monetary policy are not having too much of a flow-on effect. And of course, we're looking ahead to Jackson Hole too, so a bit of a risk-off tone tone more broadly across the regional benchmark index, down for a third day. We also had exports in South Korea barely budging in August. That is weighing on the South Korean won, really dragging down these EM currencies. The Korean won now at a 13-year low with 13.40 in sight. It is weaker by around 1% today. Manus.
Oof. That's a flash win. Jules, thank you very much. Julia Sally with the very latest on the Asian markets. To Europe, in the middle of the worst energy crisis in decades, politicians have been forced to seek the alternatives. In Germany, the leaders there say the country may need to extend the life of nuclear plants if it can't replace all of the imports of Russian gas. Stephen Suchinsky is our energy reporter in Singapore. I mean, this is a very unpalatable political situation for Schultz that he finds himself in. How real is this extension?
Well, right now, it's really unclear whether or not the extension will come through. Their government is right now doing a bit of a study on it, on whether they should extend the life of 3 nuclear reactors, which are set to shut in December. And the results, it's still pretty unknown. We're going to see the results later this month or early next month. But there is a rising chorus. 60% of German folks, according to local polls, support extending the life of these reactors. I mean, it wouldn't save Germany's energy crisis, but it would certainly help. It could replace about 4% of the gas that they import from Russia, which isn't a ton, but it's also, better than nothing. And it's these assets that could be used. There is a growing chorus among the people, among analysts, among people outside of Germany pushing for it. But still, Habeck and other officials within Germany don't think it's the best option. They're worried about safety. They're also worried about potentially reneging on the promises that they made to their voters. So with all of those things combined, it's very unclear. But the clear thing is there's going to be more and more pressure on Germany to restart those reactors, extend the life of those reactors, especially as Russia threatens to cut gas supply to the region. You're going to see the Nord Stream 1 pipeline go offline for 3 days at the end of the month. Will it turn back on? Traders fear it might not. So all those things combined puts more pressure on reversing their policy to phase out nuclear by the end of the year.
Yeah, the German economy is certainly under pressure more than most. Stephen, thanks so much. Stephen Stupczynski there, our energy reporter in Singapore. Now to the UK, Britain's summer has already been punctuated by scenes of travel chaos, and there's more to come. Workers at the country's largest container shipping port, Felixstowe, have joined the list of those on strike. For more, we're joined by Lizzie Burden, who's in Felixstowe for us. So Lizzie, set the scene for us. What is the latest when it comes to the summer of discontent?
Well, Danny, it's day 2 of 8 days of strikes here at Felixstowe. About 2,000 workers are expected to join this dispute over pay because, of course, we've got double-digit inflation here in the UK. It's going to disrupt trade. It's estimated that it'll impact $800 million worth of trade. And to just give you an idea of the scale of the trade this port does, about 4 million of those containers pass through this port every year. It's about the equivalent of Rotterdam, Europe's biggest port and trading hub. And it's going to impact imports and exports. But the port officials are saying that they can weather this storm. They've been through COVID and Brexit. The reality is, though, they're not going to know how bad it'll be until they see how many workers cross the picket line. But, Danny, it's not just the disruption to trade. The economic cost is twofold because, of course, there is the risk of a wage price spiral. It's not just the port workers here who are striking. It's also the dockers at Liverpool, the postal workers, the transport workers, the barristers, the nurses. And if this strike action continues to spread across sectors, the risk is that the unions add to the inflation surge that they're trying to shield their members from.
Lizzie, thank you very much. Heck of a backdrop. You got to hand the mic between yourself and Francine. She gets Botticelli. You get a very, very beautiful south of England backdrop. So well done to you. Lizzie Burden tracking. Yeah, it's a heck of a background, I can tell you that. Lizzie, we'll see you through the morning. Great work there in Felixstowe. Later in the show, we're going to get the latest, Danny. We're going to talk Credit Suisse. We've just had those breaking red headlines on a new CFO joining the team, and reports that the investment bank could be bracing for a major shake-up. The big take later on this morning. This is Bloomberg.
VK ฟิล์มฟิล์มรถยนต์เกรดสูงกันร้อนสูงสุด 76%
At Bloomberg, we believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. It's a community of global leaders and innovators who are blazing new trails to transform business and government. This platform will help them share their ideas with the world and provide access to the resources they need to bring them to life. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
If you do any kind of business in this country, there's a pretty good chance that you're going to see that business registered in Delaware. Why? Because that's where you do it. And our point was Wyoming can be that venue for blockchain enterprise, for crypto.
It's not the Wyoming way to sit around and wait for change. We want that independence, we want that freedom, we want that individuality. And that's a common theme that brings together bipartisan support for this in Wyoming.
We want to make sure that people understand, especially in Wyoming, but as the United States as a whole, this trend is coming. It's not going to stop. This is more of a small town that's growing into what I would call the cryptocurrency version of Silicon Valley.
It's the philosophy of that rugged individualism, the independence, and the ability to really get things done for yourself and control your own destiny. You get that from a blockchain, and you don't get that without it.
Innovation, money, and power collide in Silicon Valley and beyond. Bloomberg Technology with Emily Chang. Weekdays at 5 p.m. in New York and 2 p.m. in San Francisco. This week, as the world watches inflation rise, employment rebound, and fiscal policies react, all roads lead to Jackson Hole for the Kansas City Fed's 2022 Economic Policy Symposium. Bloomberg's all-star team is live as policymakers and financial insiders discuss the economic issues and solutions that keep the world's money moving. Coverage starts August 25th on Bloomberg Television and Radio.
Welcome back to Bloomberg Daybreak Europe. I'm Danny Berger in London with Manus Cranny in Dubai. Now, it is the unmissable event in the central bank calendar, and this year, Jackson Hole, well, it's going to have even more weight than usual. We're going to hear from the full range of regional Fed presidents, as well, of course, from Chair Jay Powell. All eyes will be on his speech Friday and how many clues he's going to give Manus on the size of the hike we could see coming in September.
Well, certainly the dollar is primed both in terms of rates and fear. But let me just put it to you what Stephen Gallo has to say at BMO. The Fed's influence on the dollar has mostly dissipated. But the influence of the dollar over risk appetite levels and the ability of the deteriorating financial conditions to cause the dollar to strengthen are both still elevated. Near-term punch to a medium-term drop. Let's put that to Gallo. He joins us now. Stephen is the head of FX strategy at BMO. So, Stephen, I like the narrative. We've talked about dollar exhaustion, but you make it very clear. What the Fed does next is not necessarily what drives the dollar. It's that sense of fear in global markets. So just talk us through whether there's one more leg higher in the dollar. Good morning, Stephen.
Good morning. Well, Manus, you've hit the nail on the head. I mean, this is an issue that I think FX investors are obsessing over, for want of a better term. The timing and the extent of the peak and the broad value of the dollar. Our view is that the peak in the dollar is going to come within 1 to 3 months, but we lean towards the view that the peak will probably be closer to the 1 month part of the curve, or within 1 month rather than 3 months out. And yeah, we just see in terms of the geopolitical risks, in terms of the hard economic landing risks in Europe, we just see a number of different factors potentially coming to a head at the 1 month part of the curve. So yeah, risk aversion and the dollar's influence over risk aversion, I think, are the primary focal points right now for what can drive the dollar.
Okay, so that, as you say, it peaks out perhaps over the next month or so. But past that peak, Stephen, I wonder how much desire there will be to move against the dollar. Bloomberg has some hedge fund data out showing that we're our most net short in about a year. So, okay, the dollar rally gets pricked, but then how far can it actually fall from here, Stephen?
Yes, I think that's a fair point. We think it can fall gradually, although we think that there are probably cases to be made that the dollar doesn't fall as much against the major net importing currencies, net commodity importing currencies of the G10 space. So we tend to favor commodity exporting or commodity linked currencies more. Whether it's a rising dollar or a falling dollar environment, we think that those currencies still offer value for various reasons, which we can get into. So I can think kind of like you're alluding to, the weakness of the dollar once the peak is in, and it's confirmed that the peak is in, is probably going to be uneven across the G10 space and probably across the broader FX space as well.
In terms of that uneven landscape, Stephen, are you back, or can I convince you to come back to a breach of parity on the euro? The PMIs will be out later today. We put it in the GTV library, which is the yield differential. It's euro-dollar, and it's 2-year yields to US yields. And that differential is obviously collapsing. Do we retest parity? Do we drive through parity, Stephen?
Out to 1 month, in terms of the 1 month part of the curve, we think that's a higher risk than, we think it's a non-zero risk, and probably, if anything, the risks are tilted in that direction because we think a lot of these structural balance of payments, geopolitical risks, they could come to a head within the 1 month portion of the curve. So we're leaning in that direction, and we're also leaning in the direction that, for the time being, say, looking out 1 month into the horizon, the risks of a bigger move for cable, euro dollar are towards a downdraft in those currency pairs rather than an updraft, if I may. So
yeah, well, I mean, fair enough, Stephen. If I can jump in, you have sterling doing much the same dynamic that Manus was laying out, where you have that rate differential picking up speed, but that's not giving us a bid into cable. Stephen, I love in your notes you talk about you have a conservative view in terms of where sterling goes, but on the low end you have 120, and we're below that measure at the moment. So I mean, in terms. Okay, 119. Thank you for that clarification. But Stephen, we're still below that. Look, I can still challenge you at 119.
Don't get picky with him.
I can still challenge.
You can challenge a little bit, but don't forget.
Okay. Well, give me the 119 view, Stephen. Give me your thesis for it.
I'm not going to give you the 119 view. The 119, you can look at 119 two ways. You can say that's where we think the low is going to be, or you can look at it in terms of that's where we think the level of cable is going to be after we hit the new low and cable recovers. So there are different ways that you can spin that story. It's just an end of quarter or end of 3 month forecast. That's all it is. It doesn't mean you can't get volatility in between those numbers. So that's the way I would be pitching to you that forecast profile right now. Before we settle at 119 in 3 months, you could get a deeper correction lower in cable within the 1 to 3 month period. And I would say, based on the UK's fundamental backdrop and so on, we don't have to go through all the fundamentals. We know they're poor, all of us. We think that there are bigger risks of a downdraft in cable rather than an updraft. If you're looking 18 months out, perhaps 120 in cable, not a bad idea to be picking up some pounds versus the dollar. There probably is some value there. In fact, I think price action suggests that's what a number of investors have been doing. But near term, I would not be buying the pound in size until we have full confirmation that core and headline inflation pressures in the UK have peaked.
I like you're coming out fighting this morning. We like that. Look, very briefly, some would say that China are hitting the panic button. And I just want to wrap it back to your commodity calls, the CAD, the NOK, and the stocky. There's a whiff of panic in China, which can have a bigger effect on some of those high beta currencies sometimes, Stephen. How worried about China are you impacting your higher commodity calls? Because oil looks weak, briefly.
Look, I think China is clouding the near-term demand outlook when it comes to energy and currencies that are linked to energy. But regardless of, well, if we don't have a hard landing for the global economy, then it's a no-brainer. You want to own these commodity-backed currencies. If we do have a hard economic landing for the global economy, and China plays a big role in that, we would just say buy the dip, because medium-term capacity constraints, higher cost curves for a number of these commodities, and positive terms of trades for a number of the commodity-linked currencies, they're going to dominate the picture over the medium term for various reasons. So we still don't think that prices are, if they fall briefly and abruptly in the event of a hard economic landing, we don't think that they're going to stay at very low levels.
Okay. Stephen, as always, wonderful to get your thoughts this morning. Thanks so much for joining us. Stephen Gallo there, European head of FX strategy at BMO Capital Markets. Coming up, no slowdown for Lamborghini. We're going to get you our conversation with the supercar maker CEO next. This is Bloomberg.
At Bloomberg, we believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. It's a community of global leaders and innovators who are blazing new trails to transform business and government. This platform will help them share their ideas with the world and provide access to the resources they need to bring them to life. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Everything you need to get set for the start of U.S. trading. Bloomberg The Open with Jonathan Farrell. Drilling down on the numbers and preparing you as only Bloomberg can. Weekdays on Bloomberg.
It's your Monday edition of Daybreak Europe with Manus Cranny. That's me in Dubai, Danny Burker in London. Let's get the first word news with Juliet Sali. She's in Singapore.
Manus, Germany's leaders say the country may need to resort to nuclear power if it can't replace all its imports of Russian natural gas. Chancellor Olaf Scholz and Economy Minister Robert Habeck have confirmed that they could extend the lives of the nation's 3 reactors beyond December if needed. Germany had previously said it would stop using nuclear by the end of the year. In China, the province of Sichuan is extending industrial power cuts as the heat wave persists. Officials say blistering temperatures and surging demand for air conditioning have caused gaps in generation. Companies including Toyota have already suspended operations in the region for several days. The power shortage adds another challenge to companies already contending with the country's COVID-0 strategy. It's reported members of the UK's Criminal Bar Association have voted overwhelmingly to begin permanent strike action from next month. Court cases have already been disrupted.
Energy skyrocketing, especially in Europe. We have not seen any slowdown yet.
Lamborghini CEO Stephen Winkleman there speaking with Bloomberg's Guy Johnson. And Manus, I literally have nothing to add to this besides the fact that I was talking to Matt Miller about my desire to get a Lamborghini Countach. That's literally all I can add. So, you know, if anyone wants to buy me my next
I'm going to let you into a secret because I know what part of London you live in. So let me assure you of a couple of things. A, you won't be getting very far in a Lamborghini. B, the speed ramps where you live in your part of London will prohibit you from ever revving this car in any kind of speed fashion at all. But I can tell you here where I live, they're a dime a dozen, kid. They are a dime a dozen. Lambo me up outside the Palace on a Friday night. Not my palace, of course.
Okay, I know what activity I'm doing next time I visit you and what car I'm renting, Manus.
Yeah, I'll leave that to Yusuf, and he's the kid with the fast car, and the producer of this show likes a little bit of speed. I feel the need for speed. Yeah, he watched that movie as well. We'll talk about that in just a moment. This is Bloomberg.
VK ฟิล์มรถยนต์เกรดสูงกันร้อนสูงสุด 76%
We believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. This platform will help them share their ideas to reshape our world. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
So let's go inside the boardroom. Let's suppose you win a proxy fight and or you just get invited onto the board. You go to your first board meeting and you're the person who's saying you can fix this company, and all of the others on the board of directors are saying, well, we're doing pretty well. How do you get received when you start saying, here's what I wanted you to do?
Well, first of all, we don't bring that to the boardroom. Our time is spent with the CEO, the chairman, the CFO, and share our plans with them outside the boardroom. We try never to solve an issue in a boardroom. Okay, it's always best done the day before, the week before, outside that room. We wouldn't be there if they really were doing well. So it's really hard for them to straight face and tell us we're doing well. And we present them with a plan.
It's your Monday edition of Daybreak Europe with me, Manus Cranny, and Danny Berger in London with the stories that set your agenda.
Seeking stability, China cuts its benchmark lending rates. Beijing looks to boost an economy saddled by COVID measures and a worsening housing crisis. Sentiment restrained. U.S. futures in the Nikkei index in the red, with investors looking ahead to further Fed tightening indicators at the Jackson Hole summit later in the week. The nuclear option. German Chancellor Scholz weighs using atomic plants to plug the energy gap as gas supplies continue to fall short. Manus, it's all about the energy crisis, unabating inflation in Europe and the economic woes there, and a U.S. that's gearing up for Jackson Hole. Will the Fed try to strike a distinct and perhaps different tone than what the market is reflecting?
Well, Christine Lagarde, of course, is not going to physically be at Jackson Hole this year. And I put it to you, Danny, one of the trickiest things that the ECB has got to do is thread that needle between will they still go ahead with the 50 basis point hike in September as everybody thinks? We'll ask our guest that question. Yields rise this morning. We're getting ready. The pension funds are salivating at the thought of 3.5% on yield. They can load up the tank there. Brent is down by 1.29%. China cuts its rates. People are worried about a hard landing. The dollar is bid on a risk-off scenario. In cable, Stephen Gallo at BMO says you risk a near-term downside before you settle into a bandwidth 119, 120. He wasn't happy when we chastised him on a break of 120. Naughty Danny. Naughty.
I know.
Challenging the guests on their thought processes.
I was going to say, it's really kind of you to say he wasn't pleased with us when it was me. It was purely me. Anyway,
Can I say,
you're a bit kinder this morning.
You. You. Oh,
okay. Well, Look, in all fairness, Manus, you're talking about the risk-off mood this morning. I mean, it is so apparent in equities this morning. Basically, the only thing getting a bit is China, and that's, of course, off the back of that LPR cut, the hopes there that it would help boost the property sector. We are looking at European stocks, futures, and S&P and NASDAQ, all in the red. Some underperformance when it comes from the U.S. We are looking at the S&P and NASDAQ down about 0.5%. Manus, a pretty substantial tumble yesterday. Friday. Down about 1.33% for the S&P. The NASDAQ goes down 2%. We have seen this pretty remarkable bear market rally, but of course, at the moment, Manus, everyone is just gearing up for Jackson Hole to see whether that type of pivot narrative can stick.
Exactly. Well, Britain's summer has already punctuated scenes of travel chaos, and there's more to come. Workers at the country's largest container shipping port, Felixstowe, have joined the list of those on strike. For more, we're joined by Lizzie Burden. She's in Felixstowe. She's at the docks. So what's the latest that you can tell us in terms of the scale of this strike? Lizzie?
Well, Manus, about 2,000 workers, as you can see behind me, some of them are striking. It's the second day of an 8-day strike so far. Overpay because of this double-digit inflation that you've got in the UK. Maersk has already had to divert 3 vessels, and it's monitoring 11 more. Flexport says that it's going to take 24 days to clear the backlog of cargo. And of course, that'll have a knock-on effect on other ports around Europe. And so the Russell Group is expecting that this will impact about $800 million worth of trade. So it's a significant hit to imports and exports. The port's trying to play down the impact because they say they've already been through COVID and Brexit, so they're going to be able to weather the storm. But really, the impact's going to depend on how many workers cross the picket line. And Manus, I hate to mention the C word in August, but retailers are looking forward to Christmas at this point of the year, so it will be a disruptive time.
Whoa, Christmas. We are not ready for that, Lizzie. And Lizzie, also good work there.
I'm always
know
ready
it's
for a
loud,
bit of Christmas.
Of course. I mean, okay, who isn't? Christmas come early, but maybe not great. So you laid out what some of the arguments are about what the disruption will be, Lizzie, but do we have any numbers in terms of trade specifically what the impact will be?
Well, you've got about $800 million worth of trade set to be affected. This container port handles about 1/3 of the UK's container trade. It's more Asia-facing, whereas Liverpool, where dockers are also expected to strike, is more Atlantic-facing. But remember, it's not just the disruption to trade that will be the economic cost. There's also the risk of a wage price spiral, as the Bank of England has warned about, because the workers have already turned down an 8% pay rise. But you can understand that when you've got double-digit inflation in the UK, perhaps. But the risk is that this spreads to other sectors. You've already got the transport workers striking, the barristers, the nurses, the postal workers. And so the risk is that you have a wage price spiral adding to the inflation surge in the UK. It's become a hot topic in the Conservative leadership race. Liz Truss, of course, is saying that she'll clamp down on industrial action and the disruption that it causes as well.
All right, Lizzie, thank you very much. Lizzie Burden there in Felixstowe for us. And Manus, let's dig into the conversation further. Joining us now is Chris Hare, senior economist at HSBC. Chris, thanks for joining us this morning. So Lizzie there, just yet another thing to keep this UK economy down. People are talking about perhaps the need for rates to go to 4%, considering that double-digit inflation we got. Danny Blanchflower says we need to be cutting. I mean, what can this economy actually handle from the BOE amid these threats of a wage price spiral?
Well, of course, this is really difficult for the Bank of England. It's such a dilemma. In our forecast, we're expecting the UK to fall into recession this winter because of that kind of disruption we're talking about, because of soaring energy prices. But at the same time, we're also forecasting inflation to hit 14% at the start of next year. So what do you do as a central banker? Now, in terms of our forecast, we've got gradual further rate rises through the back end of this year because you have to respond to that high inflation. And the Bank of England is trying to show that it's taking inflation seriously. But as that inflation really kicks in, or as the recession really kicks in, eventually over time, and hopefully as long as wholesale gas prices don't keep spiralling upwards, we think the Bank of England can and will actually take a pause through next year. So we don't see all that much in the way of further rate rises. But of course, it's really uncertain times.
Chris, look, as an economist, you're not going to want to be answering an FX question, but there is no doubt about it. You know, sterling's weakness has a number of different issues for the economy in terms of flow of capital in and in terms of deficits. Given the scenario that you think that maybe the Bank of England will have to hit a pause button on rate hikes next year, is that even more of a flesh wound to sterling? We've got it in the library. It's there if we can just show it, which is that rising short end of the curve, but yet no succor to the currency. So talk us through your thoughts on that.
Well, sure, it's hard to feel that constructive on sterling or indeed European currencies more broadly at the moment. We've got a world where we think that in the US, the economy can sustain a number of further rate rises. So you've got the Fed still moving upwards, whereas in the UK and indeed in the Eurozone, we expect those pauses to take place through next year. And we're not sure if all of that differential has been priced into markets, so that you could expect creating additional weakness in sterling. Also, there are those underlying issues that you've just been discussing. Strikes, there's a big UK current account deficit, so there are all those woes facing the UK that you think, well, maybe it's not very easy to be too constructive. And of course, the potential effect of that is if you've got a weak pound, that's going to push up further on UK inflation. So I'm afraid it's hard to tell a very optimistic story there.
Well, you make clear your optimism perhaps also does not extend to the rest of Europe. PMI's out tomorrow. It seems like a recession is inevitable, but how bad will it likely be?
Well, as far as the PMIs goes, this is for August, and we sort of see the stagnation before the storm. For manufacturing, the PMIs are also pointing to slight contractions in Eurozone activity, but in services, you know, we're expecting kind of flattish activity. But of course, what you're still seeing in the Eurozone is potentially some reopening effects still going on, particularly when we're talking about tourism, for example. And of course, European households, particularly in Northern Europe, they haven't turned their heating on yet. But when they do, when that inflation gets even higher, when the real squeeze from higher energy feeds through in a significant way this winter, that's when things are really going to get difficult. And that's the point at which we expect the Eurozone economy to start contracting, which I think is pretty much becoming the consensus view now.
Now, people will probably start throwing eggs at the screen when I ask you this, but let's have a go at it. Trichet had to backtrack from his rate hikes many, many years ago. Hiked rates, his folly in the eye of a great crisis, and had to backtrack. Is there any risk that Lagarde could have the same fate?
It's possible we could see rate rises and then cuts. It's not our central case. I guess this time is different to what we saw back in 2011. You know, back in 2011, I think it was easier, ex post at least, to tell a transitory story of inflation. We had higher energy prices and those eventually dropped out. And then we had a very soft underlying inflation environment. This time around, yes, we do expect headline inflation to start falling back in Europe through the course of next year after a peak this winter, this autumn-winter. But then again, what we're seeing now through Europe is strong growth in wages, or certainly stronger than we saw 10 years ago. We're seeing relatively elevated rates of core inflation, and that points to a lot more stickiness in terms of the inflationary environment. And under that sort of environment, it might be harder to imagine a significant backtracking in those rate rises than we saw 10 years ago.
I mean, I just look at last week, you know, we had those German PPI figures that, I mean, it was, you know, a nosebleed with how far up they went. You talked about the fact, you know, this August European economy saved a bit from the tourism push. But can that extend to Germany? Are we about to witness this period where, because the energy crisis is so acute in Germany specifically, that perhaps the country fares worse than the rest of Europe?
Yes, I think Germany is probably one of those which is set to potentially be hit hardest by the energy crisis. If you want to find any silver linings. It has
Please.
been the case that the supply build-up of gas in Germany has been better than a lot of analysts have expected. And in terms of our central macro forecasts, we don't have outright rationing as part of our central case, but it's more of a price issue instead. So you've got those high energy prices weighing on the domestic economy. You've also got softness in the global economy, and that's going to be a big headwind to German industry, and I think we're already seeing that. So with regards to Germany, I think things do look pretty tough over the months and the quarters ahead.
OK, well, let's see what those PMIs deliver this week in terms of the data front for Christine Lagarde. Chris Hare, senior economist at HSBC, thanks for joining us this Monday morning to set the agenda. Coming up, we're going to focus in on the Credit Suisse story. The bank names a new CFO and staff at the top level anticipating cuts from the latest emergency restructuring. We focus in on the troubles of the lender. This is Bloomberg.
VK ฟิล์มรถยนต์กันร้อนดีราคาถูกรถยนต์เริ่มต้น 3,000 บาท
If you think Heinz ketchup is on its own, think again. Garlic ketchup, there's hot too. Arabic spicy is all for you. You've got hot ketchup, garlic, hotter garlic ketchup. Arabic spicy is just for you.
You will put a woman on Mars. You will bring forth global cooling. Because when you subscribe to Bloomberg, you won't just get news. You will get insight into limitless possibilities. Before you change the world, Bloomberg.
Imagine simply climbing a cable into space. The concept is known as the space elevator. Not only could it significantly change how we leave planet Earth, but it could also completely transform humanity's relationship with space. And there are scientists who think we could have already built it.
We have the material, we have the technology, we have the lasers, we have the climbers, we have all of it. If a private entity wants to build it, or a government, they can build it. It'll change society. We have no clue how colonizing into space, how really spreading out into space will really change our society over the next 50 to 200 years. It'll be completely different.
From the world of politics to the world of business. Balance of Power with David Weston. News, analysis, insight from and about politics power players. Weekdays, this is Bloomberg.
Welcome back to Bloomberg Daybreak Europe. I'm Danny Berger in London. Manus Cranny is in Dubai. Let's get to the first word news. With that is Juliet Sally in Singapore. Jules.
Danny, a senior diplomat is reported to say that Russia doesn't see a diplomatic solution to the war in Ukraine and expects a long battle. Moscow, meanwhile, is investigating a car bomb that killed the daughter of a Russian nationalist who'd herself been sanctioned by the US and UK. The bombing comes ahead of this week's 6-month anniversary of Putin's invasion of Ukraine. Chinese banks have lowered their benchmark lending rates while authorities stepped up support for the property market with additional loans. The 5-year loan prime rate, a reference for mortgages, was reduced by 15 basis points to 4.3% after being cut by the same amount in May. This as Beijing battles a worsening housing crisis. Germany's leaders say the country may need to resort to nuclear power if it can't replace all of its imports of Russian natural gas. Chancellor Olaf Scholz and Economy Minister Robert Habeck have confirmed that they could extend the lives of the nation's 3 reactors beyond December if needed. Germany had previously said it would stop using nuclear by the end of the year. United Health, Amazon, CVS Health and Option Care Health are said to be among bidders for the US company Signify Health. Sources tell Bloomberg that United Health has submitted the highest bid in excess of $30 a share, while Amazon's offer is close behind. Signify is holding a board meeting Monday to discuss the offers. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Manus.
Jules, thank you very much. Julia Tully in Singapore. Today's big take is on Credit Suisse, and the staff of the Swiss bank are anticipating deep cuts from the latest emergency restructuring. This as the lender gives up on its ambitions to be a Wall Street titan. We spoke to David Harrow at Harris Associates about the issue on Friday.
The last 10 years certainly have been bad, very bad for the bank. But you look at the situation today, trades at less than a third of book value. Yeah. It still has a robust private wealth business. All they have to do is prevent the investment bank from losing money and get it back to some sort of growth.
This morning, the bank has named Dixit Joshi as the new chief financial officer. And joining us now is Jonas Bergman with the big take. Jonas, good to have you with us. So the shake-up, the scale of the shake-up, I take my mind back to when Motti and Orchel went to rip up the script at UBS. They put out a number of 10,000 job cuts. What number of job cuts does Credit Suisse need to credibly put on the table? What do we expect of the investment bank?
Well, yes. I mean, we're talking with the new CEO is clearly looking at a pretty huge shakeup at the investment banking arm to leave it more focused on asset and wealth management. The scope of the shakeup isn't clear right now, but from what we're hearing in the most extreme case, senior figures say that as much as 2/3 of the investment bank could be on the block. This, obviously marking a massive retreat for the firm. It's even a possibility that the investment bank ceases as a separate unit with deal makers folded into other units, asset management, wealth management where needed. We're hearing one team that looks relatively secure. There still is the M&A advisory team. But still the question marks now are over areas such as fixed income trading, leverage income. As you know, they've already exited the prime brokerage business.
And Jonas, at the same time, as Manus mentioned, these announcements this morning, a new CFO, a shakeup when it comes to the COO as well. So already seeing some of these changes take place. I mean, how significant are these? And in terms of what you're laying out, when can we expect some of those cuts to come?
I think, obviously naming a new CFO is very significant, but we already knew David Mathers was stepping down. Dixit Joshi is a very experienced banker. He comes from Deutsche Bank, where he was treasurer and played a big role in overhauling Deutsche's balance sheet. He also worked at Credit Suisse previously. The new CEO is moving at speed. We could potentially see some details being laid out in the third quarter after the third quarter earnings announcement on October. So they're all working at speed to achieve this extra 1 billion francs in cost cuts that they have targeted.
Well, let's be frank. Since I sat down with the chairman on the results, the stock's down another 8%. The risk is this: your key talent leave, they get bought out, they're cheaper to buy out from any other bank and come along, scoop them up. They're cheap to buy. Why would you stay? Given your long-term incentive program's already in the bathtub. I mean, it's a hard sell to keep talent. They've already spunked $1.3 billion on keeping talent in the bank.
Exactly. They've spent a lot of money trying to prevent the larger defections of key people, but that's also raising internal sort of grousing at the bank. Why pay these investment bankers so much when they've been losing money? So they're between a rock and a hard place.
All right, Jonas, thank you very much. That's Bloomberg's Jonas Bergman there. Really interesting stuff on Credit Suisse. Again, it's our big take today. You can read it online or on the terminal. NI Big Take Go is where you want to head. Coming up, extreme hot weather in Europe is drying up rivers, killing crops, worsening the energy crisis, and forcing governments to enforce water restrictions. We're going to get the latest for you. This is Bloomberg.
บริการออกแบบและติดตั้งวิดีโอคอนเฟอเรนซ์โดยผู้เชี่ยวชาญ Smart Solution Computer
At Bloomberg, we believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. It's a community of global leaders and innovators who are blazing new trails to transform business and government. This platform will help them share their ideas with the world and provide access to the resources they need to bring them to life. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
If you do any kind of business in this country, there's a pretty good chance that you're going to see that business registered in Delaware. Why? Because that's where you do it. And our point was Wyoming can be that venue for blockchain enterprise, for crypto.
It's not the Wyoming way to sit around and wait for change. We want that independence, we want that freedom, we want that individuality. And that's a common theme that brings together bipartisan support for this in Wyoming.
We want to make sure that people understand, especially in Wyoming, but as the United States as a whole, this trend is coming. It's not going to stop. This is more of a small town that's growing into what I would call the cryptocurrency version of Silicon Valley.
It's the philosophy of that rugged individualism, the independence, and the ability to really get things done for yourself and control your own destiny. You get that from a blockchain, and you don't get that without it.
Welcome to the world of decentralized finance. Bloomberg's covering all things crypto, the people, the transactions, and the technology. Bloomberg Crypto, Tuesdays.
This is Bloomberg Daybreak Europe. I'm Manus Cranny in Dubai. Danny Berger at London HQ. Danny.
Well, Manus, we've seen extreme hot weather that's been drying up rivers, killing crops. We're seeing the energy crisis and forcing governments to enforce water restrictions throughout Europe. The high temperatures, they've also exposed flaws in the UK's water system, and it could make it harder for the country's unpopular privatized utilities to borrow money on public markets. Now, investors, they are ready to demand higher yields, especially for providers lagging behind on their leakage targets. Joining us now for more is Bloomberg's Priscilla Azevedo Rocha. So, Priscilla, when it comes to the UK, I mean, we're already in this, summer of discontent. What's happening in terms of the water management?
Well, hi, Danny. Thank you very much for having me. In the UK, in the terms of water management, the companies have started to impose hosepipe bans. It means that, businesses and houses, they cannot water their gardens, people cannot wash their cars and things like that, and they're subjected to fines. This is especially true in the south of the country, like in west and east England. In London, for example, this is very important because the ban starts this week on Wednesday.
Okay.
Priscilla, good to have you with us this morning. How did we get here? Was this a lack of capital expenditure by the utilities driving the returns to shareholders, or is it just a combination of pretty darn bad luck in terms of both weather, politics, and an energy crisis?
Well, Manus, there's two sides of this story. In one side, we have an extreme bad luck season with very hot weather. We had very, very dry winter followed by a very dry spring. And in July, we've seen the hottest day in London since, actually on record, temperatures reached 40 degrees. And then on the other side, we have the utility companies and how they're managed. Those companies, they have improved over the past 2 or 3 years, but they're still falling behind their leakage KPIs. What does that mean? It means that, on average in the UK, about 3 billion liters of water is leaked every single day. That is the average of 30% of what someone consumes on a daily basis.
Well, in terms of investors in some of these utility companies, what are they saying? What are they doing?
Right. Because those companies, they are private, they, like many other companies in the UK and even in Europe, they have used the bond markets quite often in the past years to raise funds. The utility companies in the UK, especially in England, because in Scotland and Northern Ireland is slightly different, they account for about like 10% of all the bond sales from this country. So they have a very broad investor base, right? There's a lot of investors looking into this. When they come to the markets again in September, all the companies, this is not only true for utilities, they're going to be like investors are going to be demanding more, and that's because the market has moved because of the central bank cycle and rise in interest rates, right? But for the water companies in particular, the bad headlines are not going to do anything for them.
Right.
Investors are going to be questioning the governance, their ESG credentials, like those companies, they are asking the population to restrict the water they use, but at the same time, on the other side, they are leaking.
Right. Fair enough. Priscilla, thanks for laying it all out for us. That's Bloomberg's Priscilla Acevedo Rocha. And Manus, look, it really, again, is hard to get a really bullish stance on sterling, given all of these risks which Priscilla and some of our guests have laid out.
Absolutely, and sets the tone for why we have somebody at Felixstowe. RPI swaps for 1 year out are trading at 11.6%. That is where the UK believes inflation will be in a year's time. Hence the reason why you lobby for a pay rise. It's a beautiful day in London. European markets is up.
VK ฟิล์มรถยนต์กันร้อนดีราคาถูกรถยนต์เริ่มต้น 3,000 บาท
We believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. This platform will help them share their ideas to reshape our world. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
Hate Facebook but like your friends? If you live in Europe, your life might be about to get a whole lot easier. Starting in 2024, the European Union is going to require big tech companies like Meta and Apple to make it possible to send messages between their messaging apps. They might let an iMessage user chat with a WhatsApp account. The technical name for this is interoperability, and it's part of the EU's Digital Markets Act, legislation intended at loosening big tech's grip on the digital market. The EU's thinking is that messaging locks users into the tech giants' platforms because leaving WhatsApp or Facebook Messenger means losing the ability to communicate with all your friends. But thanks to the EU, you'll be able to send a message from a smaller competitor like Viber to someone using iMessage. And if every company signs on, then you might be able to communicate with everyone using just a single messaging app. This change clearly would make life easier for consumers, but it's quite controversial. Some technologists think it could break end-to-end encryption or stifle the innovation that makes messaging platforms fun. And if smaller companies like Signal or even the big tech companies decide they don't want to use these new technical standards to connect their massive messaging platforms, some argue the law is completely useless. It will take several years before the EU's rules go into effect, but if this new interoperability requirement works, it could have a huge impact on big tech's behavior and the way you communicate. And of course, where the EU leads in terms of tech regulation, the US often follows.
Innovation, money, and power collide in Silicon Valley and beyond. Bloomberg Technology with Emily Chang. Weekdays at 5 p.m. in New York and 2 p.m. in San Francisco. However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
Good morning. Welcome to Bloomberg Markets Europe. I'm Anna Edwards, live in London. Mark Cudmore, our Markets Live managing editor, joins us from Singapore to take us through all the market action this hour. The cash trade is just less than an hour away. Here are your top headlines. Seeking stability, China cuts its benchmark lending rate as Beijing looks to boost an economy saddled by COVID measures and a worsening housing crisis. Sentiment restrained, US futures and the Nikkei index move lower in the red as investors look ahead to further Fed tightening indicators at the Jackson Hole summit later in the week. Plus, the summer of discontent continues. Strikes at the UK's busiest port are set to upend supply chains. Here in the UK, we're live on the ground at the port of Felixstowe. Welcome to Bloomberg Markets Europe, everybody. It has just gone 7 o'clock here in London. Mark is with us from Singapore. Mark, very nice to be back with you. I wonder what the markets are saying to you this Monday.
Good morning, Anna. It's great to have you back on the show this morning. It is a risk-averse day to welcome you back, but at least there's a bit of interest going on. It's not just summer markets. Some of the kind of discontent was based on the bear steepening we saw on Friday in yield curves, but also Jackson Hole looms large over the week ahead.
Yeah, absolutely. Lots to talk about in terms of the week ahead and what is going to catch our eye. We are just under an hour away, though, from the start of cash equities trading for this Monday here in Europe. So let's have a look at the futures picture. And let's remind ourselves that during Friday's session, we saw weakness in Europe, except in the UK, where we had an area of green. We saw weakness in the United States with the Nasdaq down by more than 2%, the S&P down by more than 1%. So that sets the stage for European futures to look a little sluggish this morning. Euro Stoxx 50 futures down by 0.3%. US futures also looking a little weaker and by more than that, which is interesting given the extent of the losses we saw during Friday's session in the US. So E-minis down 0.5%, Nasdaq futures down by 0.6%. We're still dealing with some of the same issues as Friday, of course, Mark, around the Fed, how much tightening we're going to get, around Chinese growth, and we've had news developments there, as we mentioned in our headlines, and around European energy and European lack of resilience. All that, of course, adding up to some nervousness. But when you look at the GMM, plenty of nervousness in Asia, despite what the PBOC is doing.
Yeah, very, very much a clear message of risk aversion again. So you can see the equities are lower. You talked about the PBOC moves there. The one green box are Chinese stocks, but they're not exactly up much. They did cut the LPR rate, but that was largely anticipated. It was a slightly different tweak than was anticipated. They cut the longer end a little bit more and the front end a little bit less, and that's less supportive for stocks. A great stat from some of my colleagues I was just given about half an hour ago is out of the last 25 times the PBOC has promised policy support for the market or for corporates or some part of the market, only 4 times has it resulted in a 2% plus gain from stocks. And again, a little bit of disappointment today. We're seeing risk aversion in the FX column as well. The dollar, the one green standout box there, again, that is pressuring financial conditions around the rest of the world. And that goes into the fact that the real cause of this was on Friday. We saw much higher yields, but a bear steepening, which is a little bit against what we've been seeing recently, which has been a bear flattening, where we've seen the 2-year rise more than the back end. But suddenly on Friday, we actually saw it was the back end that rose quite a bit. I don't expect that to continue. I expect it to be more bear flattening the rest of this week. And finally, commodities generally doing well despite oil being lower otherwise.
Yeah, oil lower and lower than it was a couple of weeks ago. 89 on WTI, 95 on Brent. Mark, let's start our conversation around the markets, a conversation in 3 minutes about what we're seeing out there at this point. And in fact, I'll start with commodities because we just had a headline coming through across the Bloomberg saying that European gas prices surged as much as 10% this morning. I can see on the right, just over to your right-hand side, I see that European gas benchmark has jumped onto the GMM as we see those gas prices once again go higher. This is a theme we will keep returning to as we head towards the winter, no doubt.
Yeah, very much so. Thanks for drawing attention to that right to the top of the page on the commodities column there. Look, the size and scopes for this energy move are just mind-boggling what we're seeing. And I think the point is to emphasize here that it's not just for now, it's not just for this winter, it's pricing for 1 year ahead. We're pricing Europe to be deep in an energy crisis a year from now at the height of next year's summer. This is a problem that's going to run and run, and as a result, I think it's completely underpriced in European assets. I realize it's hard one to play for yields because obviously while it's a big inflation problem, it's also going to be a big growth problem, and that makes it complicated for the currency as well. But I think that ultimately European stocks have tremendous downside over the next 6 months.
Yeah, one of our colleagues, Valerie, telling me that German power, one of her charts suggesting German power hitting a 500% gain over the past year. We'll continue to return to these themes, no doubt. Let's get back to the China story. We headlined this, Mark, a cut in rates over in China. Not quite the cut at the durations that was anticipated by the markets. And so stocks going higher, but not by a huge amount.
Yes, what they did is they cut the long end by 5 basis points more than expected and the front end by 5 basis points less. It's important to emphasize these are pretty marginal moves here, and it's a slight tweaking of calibrations, so I wouldn't want to read too much into the surprise, but the message was, hey, we're providing a little bit more support for mortgage borrowers, a little bit less stress for the property sector where the real focus of pain has been over the past year, but ultimately they're providing less support at the front end that's generally about risk sentiment and that boost for stocks. And that was quite an interesting message, but I wouldn't want to read too much into these very marginal tweaks.
Where have we got to in the Fed conversation over the past couple of weeks then, Mark? Because since the middle of June, we've seen a rally in stocks. A lot of people asking whether that has now lost its momentum, I suppose, as we get towards the end of August, and maybe last week raised questions in that regard. But this was all predicated on anticipating some kind of pivot from the Fed.
So the Fed speakers have been consistent about there is no chance of a Fed pivot, and I think that's the message we'll continue to get. Now, there is still debate or lack of consensus among the Fed members about how high rates need to get and how quickly, but I think everyone has been unanimous about the idea that if a pivot next year is just completely bonkers, and then therefore that has been slowly priced out. We still have this divergence